this part. Okay.
How many do you have? Under approval, we're still doing roll call. Then we'll do that approval of the agenda. So that's this one I'll just, yeah. And then we're gonna move this over here, remember this.
We'll do the minute.
And then we're gonna move this to this. Consent agenda. Okay. Once we approve the new agenda, the new agenda.
For those of you joining us online, we're just waiting for a couple more council members to appear, and then we'll get started.
Was there audio for that?
No. Yeah, it's directly the phone. Yeah, we can't turn this on. We'll have to exit. Catherine.
I think just we sent the meeting info to Wayne, so he should be doing it.
Mr. Chair, we have a point.
Welcome, everybody. I'd like to call this meeting to order. And starting with, off of the agenda, starting with just a roll call and introductions. If we can take the roll of council members.
Of course. Commissioner Stephanie Garcia Richard, Treasurer Laura Montoya, CFA Secretary Wayne Frost,
Here.
Nick Hayes,
Present.
Catherine Allen,
Present.
John Bingaman,
Present.
Kelly O'Donnell,
Present.
Alan Sanchez,
Present.
Chris Summer. It is 6, we have 4.
Great. We'd like to open up discussion on the approval of the agenda. And to that end, we have some substantial changes on the agenda. Due to our need to keep a quorum, we want to make sure that we have members present to approve these important items that need to get done today. And with that, could I get an approval or a motion for the approval of the agenda?
Mr. Chairman, I move to revise today's council agenda in the following manner. 1, remove the icon follow-up commitment, item 3 and 4, then move items 3A through 3M to consent agenda, and then move items under number 2, SIO briefing, CIO briefing, and performance April to occur after the consent agenda vote.
Second.
4.
We have a
Second.
motion and a second. Member Bingaman seconds. Can we call the roll?
CFA Secretary Wayne Frost,
Yes.
Nick Hayes,
Yes.
Catherine Allen,
Yes.
John Bingaman,
Yes.
Kelly O'Donnell,
Yes.
Alan Sanchez.
Yes.
That's 6 in the affirmative, motion passes.
Wonderful. We can move on to the approval of the SIC minutes.
Mr. Chairman, I move that the State Investment Council approve the draft meeting minutes for May 27th, 2025.
Do you have a second?
Second.
Any discussion on that? Hearing none, we can move for the approval. Roll call vote.
CFA Secretary Wayne Frost,
Yes.
Nick Hayes,
Yes.
Catherine Allen,
Yes.
John Bingaman,
Yes.
Kelly O'Donnell,
Yes.
Alan Sanchez.
Yes.
That's 6 in the affirmative, motion passes.
Thank you. So for the information of those online and in the room, the earlier motion to move the items from the from number 3 to the consent calendar, it removes number 2, so in the investment activity and performance update. So that will be moved to later in the agenda from that initial motion. And so now we can move to the consent item under investment matters. We'd like to call a vote on the investment items on the consent calendar. Let's get the right. I believe it is item N for under the consent agenda. And just for the information of those online and the public, the investment committee of the council met last week. Mr. Bingaman was the chair of that meeting. We talked in great detail about these items and reviewed them thoroughly. that meeting went from about 1 to 4 last week, and so, we've done quite a bit of consideration with these items, and so with that, that's why we're sort of moving them to this expedited form so that we can make sure that we have a quorum and get these approved, because there's deadlines to have these things in place in August, as I understand it. So with that, could I get a motion to approve the consent agenda?
Mr. Chairman, based to the recommendation of investment consultant, state investment staff, and council investment committee, and general fiduciary oversight of RVK, I move that the State Investment Council approve the following commitments up to the stated amount of today's council agenda, contingent upon meeting New Mexico legal requirements, New Mexico State Investment Council policies, negotiations of final terms and conditions, and completion of appropriate paperwork. Roman numeral 1, 100 million, Arlington Capital Partners, 7, re-up, Cassidy Mercer. Roman numeral 2, 50 million, BRV, 20, re-up, Cassidy Mercer. Roman numeral 3, 100 million, Lead Eagle Capital, 7, re-up, Cassidy Mercer. Roman numeral 4, 250 million, Danbrook Climate Infrastructure 2 and Co-Investment re-up, Sable Mercer. Roman numeral 5, 35 million, aggregate Playground Ventures 4, Playground Leader Fund 2, re-up, Cassidy Mercer. Roman numeral 6, Strategy Asset Allocation, VHTF and MTF. Roman numeral 7, 50 million, Playground NMSIC, Next Gen Compute SMA, Cassidy Mercer. Roman numeral 8, 25 million, Root Ventures 4, Cassidy Mercer. Roman numeral 9, 75 million, Green Oak Capital Opportunity 6, Cassidy Mercer. Roman numeral 10, 35 million, DCVC 7, New Fund Series with existing manager. Roman numeral 11, 50 million, Antler US, New Mexico, top-up, Cassidy Mercer. Roman numeral 12, 50 million, aggregate, Khosla Ventures 9, CG and OPP 3, re-up, Cassidy Mercer. Roman numeral 13, 200 million, Mercer, NMSIC, private investments, top-up, Cassidy Mercer. Roman numeral 14, 200 million, Principal Investments Program, SMA, Sable Mercer. Roman numeral 15, 225 million, Nova Infrastructure 2 and Co-Investment, Sable Mercer. Roman numeral 16, 150 million, Ember Infrastructure 2, Sable Mercer. And Roman numeral 17, 250 million, Fortress Assets Based Credit 2, Lofton, Makita.
Is
Second.
there a second? Discussion on the motion. Member Bingaman, do you want to make any comments on the investment committee?
Sure,
Meeting
Mr.
last
Chairman. Thank you. Yeah, as you mentioned, we did have a meeting last week. We did have a quorum with both of us, the chairman, myself, our state treasurer joined us for a portion of the meeting. And then we had our two advisory members, Member Ulrich and Member Roman. Good meeting, and we did review each of the items and we were able to recommend them unanimously to the council.
Thank you for that. Any other comments?
Hey, Mr. Chair? Yes. Just so everyone's clear, item sub 3 under this is Lead Edge Capital. I think I heard Lead Eagle.
Oh, sorry.
But since we're approving it, probably should just, everyone's clear that that's what we're.
I acknowledge that, mispronunciation.
Yes, and then, I'd just like to take that opportunity to also mention that there is a lot on this agenda. However, the, internal, review of these things under due diligence at the New Mexico State Investment Council, these items are, initiated 10 to a year in advance, prior to the meeting today. And so internal management actually reviews all of these items in very detailed form. And so, it takes anywhere from that time period of a year to a pretty lengthy period of time to get to the point of a vote. So with that, there's been extensive due diligence that leads us to this point. So with that, if I could call for a roll call vote.
DFA Secretary Wayne Props,
Yes.
Nick Hayes,
Yes.
Catherine Allen,
Yes.
John Bingaman,
Yes.
Kelly O'Donnell,
Yes.
Alan Sanchez,
Yes.
6 in the affirmative, motion passes.
Thank you all. Okay, so let's go ahead and move to item number 2, investment activity and performance updates, which we had moved to occur after the consent calendar. And so with that, we can begin with our SIO briefing, and Mr. John Clark, if you'd like to let us know about happenings at the SIC.
Thank you, Mr. Chair. I know that we're still planning to provide informational presentations on a number of the investment items today, so I'll be brief. Just have 2 things for the council members today. The first is a reminder that we have our council retreat on July 17th and 18th. It's going to be at the Los Poblanos Historic Inn in Albuquerque. I believe this morning you all should have received an email from Francesca in our office. I'm asking that you please confirm attendance for 3 specific things. One is for the event itself. The second is if you're able to attend the dinner on the first day, which is optional, but really encourage you to attend, and it's going to be a dinner where council members and senior management would be able to interact, as well as the lunch on the second day, which would be at the end of the program. So if everyone could please respond to Francesca's email and RSVP, that would be fantastic. Third, I just want to highlight something that was in the news recently. There was an announcement by XGS Energy and Meta, which is the parent company of Facebook, for a 150 megawatt geothermal plant in New Mexico. This got some really good press because it is being announced as a $1 billion plus project for New Mexico that would result in 3,000 construction jobs and about 150 permanent jobs. This is a great achievement for New Mexico, but it's also a great achievement for SIC and one of its partners. This may not have been possible without SIC's investment into Anzu Partners. We made an investment of $15 million into Anzu Industrial 3, and Anzu Industrial 3 then proceeded to invest $10.4 million into XGS Energy as part of a $14 million Series A round. And so really, we helped through our partner in Anzu, start up this company that then was responsible for bringing this incredible $1 billion+ project to New Mexico. So the project itself got a lot of attention, but really want to commend the staff of SIC for doing the diligence on Anzu. I'd like to commend Anzu for making that investment into XGS Energy, and I'd like to commend the council for supporting this revamped New Mexico program that we're calling the NMSIC Strategic Venture Capital Program, because I think this project exemplifies what can happen through this revamped program. One thing that was never possible before was funding of projects like this. Before, it had to be a company headquarters in New Mexico, and that company had to always have the majority of their employees in New Mexico. And so it was very limiting in scope as to what we could support. This is going to be an incredible project that wouldn't have been possible otherwise. So really want to, again, thank the council for their support a couple of months ago in changing the scope of our strategic venture capital program, and thank Director Cassidy for his work on this with ANSYS. And with that, Mr. Chair, I'm happy to answer any questions.
On that point, did you have to make any legislative changes for that purpose?
Mr. Chair, we did not. Our enabling statute already gave us the authority to make those changes, so no additional legislative changes are needed.
Okay. Any questions from the council? Hearing none, thank you. Thank you, John, for that briefing. We'll turn it over to Mr. Vince Smith for our CIO briefing.
Thanks, Mr. Chair. Good morning, everyone. Good to see you here. Fed Chair Powell is in front of Congress this morning. He's been telling them no real indication of a cut at next month's meeting, so continuing to hold rate policy steady at the Fed. He indicated inflation is down, but their target is to keep, or their goal is to keep it down, which is good. The economy is still recovering from the previous bouts of inflation. So when we get the inflation, we raise the price level. We're still catching up to that new price level in terms of wages and things like that. So this looks like a sound policy, at least to me, in terms of letting the economy have a chance and people to have a chance to catch up to the new price level. He also has indicated he remains concerned over the effects of tariffs, and that's a wait and see for just about everybody, for sure. So no surprise there. I mentioned something at the investment committee I wanted to talk about just a little bit today, and this is a lot longer run type stuff. We were to present the annual investment plan this month, but with all the investments, we pushed it to August, and you'll see some of this in the annual investment plan when we talk about it again in August. But we've got several long-term cycles sort of coming into confluence here just in the last couple of years, and I expect here for the next at least 5 years. A lot of things in the financial markets and the economy just move in cycles. It's just a natural part of how things work. There's shorter term cycles, the economic cycle, which tends to be 7 to 10 years in length, all the way to social cycles, which tend to run an 80 to 100 year type time frame. But a lot of these things are really coming into confluence all at once. So the economic cycle is very, very old. Now, technically, we've had a couple of recessions. One of them lasted 2 months during COVID crisis. Another one was like 4 months. So they weren't real recessions. We haven't had what I call a proper recession since 2008, 2009. So it's been almost 20 years since we've had a recession. Typically, they happen in 7 to 10 year time frames. So we're way overdue. It's been overly low interest rates. In fact, historically low interest rates. There's a book called, I think it's The Price of Money, or The Price of Time, and it has interest rates clear back to the Roman days. Never in the history, clear back that these guys could find to the Roman days, were interest rates ever zero. And we had a 7-year period of 0% short-term interest rate, very close to zero during the COVID crisis, 50 basis points on the 10-year. Very unusual environment. We're starting to come back from that. Easy Fed policy since Alan Greenspan in the 1990s. The Fed, anytime the economy sniffled or the stock market had a 10-15% drop, Fed stepped in with rate cuts or liquidity for the banks. That's been unusual in terms of history for that to happen. And then fiscal spending. As I've mentioned to you before, we're spending 7% of our GDP in deficit. That's when you look back in history, the only time we do that or more was during the Great Depression and during war. So when an economy is strong, you just spend 7% in deficit, yet we have been. So those things have sort of combined to keep the economy out of recession, but at great cost. We see what the debt is today. We see many companies that if interest rates are only slightly higher, or liquidity was slightly less, would go out of business. They just couldn't, continue to roll over their low-quality debt. Investments get made with very low-cost capital that either have low returns or have very high risks and can lose 100%. So we have what we call malinvestment in the economy. So there's downside to keeping the economy running without a sort of a cleansing recession like we haven't had. But to the long-term cycles, there's a long-term debt cycle. Those tend to be 60 to 80-year periods. So you'll go from complete bust in debt, all the way up to very high debt at companies. We're very late in that high debt portion of the cycle. So we're just ahead of what historically has always been a bust. Again, those are 60 to 80-year cycles. Ray Dalio is somebody who's done a lot of research. You might recognize that name on the long-term debt cycle. Interest rates also run in a long-term cycle. Those tend to be 50 to 75 years when you look back in history. We've obviously come through a very low period in interest rates, and we've just started to pop back up. So where we are now today at about 4.30 on the 10-year bond is slightly below average for what the 10-year historically has traded back 100 years or so. And of course, even farther back than that for 10-year type debt. So we're just still not even quite back to normal on the 10-year, even though that's 200 basis points higher than we've been for 15 years now. 10-year bounced around 2% for quite some time. So that cycle looks like it's turned and is headed up, which is tends to be against financial markets. Inflation also comes in cycles. It's more of a wave. You'll get a wave of inflation, a little pullback, another wave, and then it will sort of sit, then you get a wave down. So it's a little bit different looking when you look back in history, but they tend to run on a 35 to 50-year period. Obviously, we've just had very, very low inflation come up out of that just the last couple of years. So we think just like interest rates, inflation has also turned and is sort of coming up against us a little bit here. Typically, we stay below 5%. The stock market does okay up into about 5%, but once we get over 5% on inflation, just about every asset does poorly. There's very few that do well when we get above about 5%. The last one is the social cycle, and this is Neil Howe. We talk to Neil on a pretty regular basis. He's written extensively on this. The social cycle runs an 80 to 100 year cycle, about the average life or the average of a long life. We are late into the social cycle. In fact, we're in the last decade, according to Neil, of that 80 to 100 year cycle. All these things together, I think, just spell volatility for our next 7 to 10 year period. Talk a little bit more about this with the annual investment plan, but we should expect greater volatility not only in the financial markets, but just generally in the world. So I think while our mindset needs to almost always be set toward growth, that's what we need to do with these assets, is grow them. I think a portion of that mindset needs to be set aside for capital preservation. We need to keep it in the back of our mind that a lot of these cycles are coming into confluence, and we're at the bad end of most of them, and expect greater volatility, and have a little bit of our mindset set toward some preservation of capital. So, Mr. Chair, that's the comments I have. We'll follow up on those with the annual investment plan in August, and talk about anything today or then that you'd like.
Okay, is there any questions from the council?
Just, Vince, a question about unemployment. We're seeing large corporations laying off people. I think some in anticipation of AI replacing jobs. We also have all of the Doge layoffs. How do you see that impacting the economy? Because in general, consumer spending is tightening up. And then if you have higher energy costs or inflation, what will that do?
Yeah, I think there's a bit of margin protection in there. So corporations have seen inflation on their side, on input costs. They're definitely seeing wage inflation, which from the worker side is great, helping them to catch up to the heightened price level here. Is a negative on the corporate side. So I think, number one, I think you are right. There's some anticipation of what AI can do. But I think this has a lot to do with margin protection. And right now, margins are still a little bit above average. So I'd be kind of surprised to see this snowball unless we go into recession. But I think they are trying to protect margins a little bit. But again, historically, they're above average. So there's some room for them to come down to kind of soften that blow.
Any other questions? Okay, so we can move on to our performance report. Welcome.
Good morning. So we have our monthly performance report. This is an update on public markets only. Our plan in the future is to do a deeper dive on the privates in these interim periods. And so in the months ahead, you'll continue to see changes. So your feedback is very important, big part of this process. In the interest of time, I'm going to turn it over to RBK.
Great, thank you, and thank you, Mr. Chair. Good morning, everyone. You do have your April performance briefing in the packet, starting on page 22, with your capital markets report here of the diligent material, and Vince provided a great introduction over the next 5 or 7 years, and you're seeing some of these trends already occurring. Obviously had quite a bit of volatility already this year, markets, whether ups and downs, and volatile for most of this year. And while they've been quite resilient, when you're looking at where we are now, almost through the first half of this year, there's still plenty of uncertainty and anticipated volatility for all the reasons that Vince highlighted. Cautious Fed, of course, tariffs, and then the other component that keeps adding and keeps evolving is all the geopolitical tension that may work its way through the market. So lots of reasons to be somewhat cautious, but again, you have a lot of wind at your back in terms of positive cash flow and a long-term time horizon, which affords you the opportunity to invest for growth, as Vince had indicated. U.S. markets, when you're looking in the bottom right-hand side, the market performance, you see that the first two lines, which represents large cap and small cap U.S. markets, have been impacted the most this year with that volatility. And large cap in particular continues to contend with relatively high valuations, despite some minor right sizing of those, still elevated by really any standard, and record stock concentration. We've talked about that in the past. Mag 7 was a theme for quite some time, but the top 10 in the S&P 500 still represent almost 38%. So still very, very top heavy, despite some corrections across some of those names. So far, the second quarter's been quite solid and has continued to move forward. This is through April, these numbers, but maybe I'll give you some year-to-date numbers just so you have those for perspective. U.S. markets have turned positive, but are still lagging materially, but the non-U.S. That's been a shift in themes as well. Things tend to go in cycles, and some of them are longer than others. We've been in a very long U.S.-led cycle, but when you zoom out and go back 100 years or so, you see that non-U.S. and U.S. do tend to trade off in periods somewhere between 7 and 20 years. This, again, has been a very long, extended cycle for all the reasons that Vince had mentioned, all the supportive stimulation that we've had domestically from a valuation, a yield perspective, and now also from a currency perspective, seeing a lot of benefit in the non-U.S. markets as all those things are coming together. Year-to-date, large cap, so this is just through essentially yesterday, large cap up about 2%, so positive, but not meaningfully so. Developed non-U.S. 16%. That's a big spread, almost 14% year-to-date, and emerging markets is up 12%. You got a very balanced implementation when you look at your global public equity. You have exposure to both and are not very top-heavy on the U.S., and that has served you well. When Marcia reviews the performance on that, you'll see that a very strong outperformance year to date on that global public equity portfolio. And then finally, the yield curve, it's just a little at the top here. Thank you. You can see that we've seen some steepening, very modest, but some steepening in that yield curve. That's put a little bit of pressure on the bond market, but overall, I think you'll see that both your public and your private debt books are doing quite well and adding value year to date. Broad fixed income market is up about 3%, so also accretive to total fund return. Marshall will walk you through some of the fund level performance, and then we'll be happy to take it.
Thank you. I'm going to take you to page 23, and again, this is the first time we presented the revised flash to the council. Again, thank you to Nino, Don, and Joel for the work putting this together. The report is entirely net of fees, so we're not mixing gross and net. It's all net of fees. And as Nino said, this is your report, so anything you'd like to see changed, please let Nino know, and we'll take care of it. On page 23 and 24, 24 through 26, we're looking at all the funds, and a change to this report, we're looking at this is where we're looking at your asset allocation versus target. What we've changed now is we start with the largest funds. So we're showing land grant at top, and then it goes to second largest, severance tax, and then early childhood. As you'll recall, and I also want to say in the title, for example, land grants at the very top, we show what percent this fund is of the total, which is, as of April, was 55.4. And we also show when the fund was established. So keeping in mind that, we're not grouping them by date, we're grouping them by market value, so we wanted to put that date in there. At the May meeting, new interim targets were set, and that will you'll see that in the June report, because they were approved in May, and the three that had interim targets set were the three largest funds, because remember, it takes a while to deploy that capital into privates. So land grant, severance, and early childhood will just show a new interim target beginning with the June report. On the next page, at the top of the page, is tax stabilization. That in May, you're at target, so the interim target will go away, and you will just show one target, and that's the long-term target. So that is the first page is looking at your asset allocation and comparing it where you are to your target. If we go to page 28 of that report, next is looking at the performance of all of the funds. And again, these are listed by size, beginning with land grant, severance, and early childhood. As Matthias mentioned, land grant on a fiscal year-to-date basis, nice outperformance. Fiscal year-to-date return net of fees, 5.65. The one-year number, 8.59, all outperforming their benchmarks. And then the 10-year, going clear out the 10-year on a net of fees basis, 6.9, and outperformance. Next, I'm taking you to page 31, please, and we just looked at performance by fund. The next is to look at performance by the asset classes. We list land grant and severance up there as well again, but you can see your asset classes, U.S. equity, non-U.S. equity, public market fixed income on this page, and you can see how they performed in each time period. If you go to page 32, as Nino mentioned, this is a flash, so this is focused on public, but I do want to show on page 32 at the bottom another change that was made. We are showing the economically targeted investments, and we started doing that. You can see the return there, negative returns across the board, a small percentage of total assets, but as of this report, And going forward, we're breaking out by small business investment corporations, so the SBIC, and then also the recovery loan program. So that's a new addition, both included and economically targeted, but we're able to break it out so you can see performance and size of each of those funds. On page 33, just to keep it in front of you, because you are responsible for the pools as well, that we're including the pools, the performance for the pool, each of the pools in the report now. And in the appendix, if you want to take a look at individual manager performance, that is in the appendix. With that, we're happy to take any questions and any comments about the report.
Thank you very much. We can open it up to any questions that the council might have. And just like to welcome Madam Treasurer, Laura Montoya. I believe she joined us.
Good morning. Thank you, Chairman.
Any questions? None from the council, so, yeah, well, thank you for the in-depth report. A lot going on right now, and so thanks for keeping us on the right track here.
Thank you.
Okay, let's turn over to one of the items under investment matters. We can have the presentation on the, it's item B under investment matters, and it's the strategy asset allocation. Oh, I'm sorry. That's correct, okay. Yeah, it's the strategy asset allocation, BHTF and MTF.
Thank you, Mr. Chair, and let's see, let me get you to the right page here. We can do this in about 4 slides.
Mr. Chairman,
Yes, Madam Treasurer.
is it possible for them to share the document online as we're going through the packet?
Mr. Chair, Madam Treasurer, we can share this document, but the other documents that will be provided after this all contain confidential information, and so we're not able to share the other documents. It would just have to be limited to this one on asset allocations.
Okay, anything that's public for right now, because I'm still driving a munchkin to daycare.
Oh.
I have my packet as soon as I get to a landing spot.
Okay, well, definitely be careful, and, yeah, and so Brent has on the screen, he's sharing the information on page, should be 51, titled Executive Summary.
Okay, so let's shift over to page 54, Brent. And what you'll see here, Mr. Chair, is an enhancement that we've made to our asset allocation process just over the past couple of 3 years since we started getting these new funds in. So wasn't too hard to manage 4 funds, but when you get up to a dozen or more now, it starts becoming a little more complex. So what you're looking at here is sort of a hierarchy of on the left-hand side, funds that have statutory language and purpose that we could put into a growth-type portfolio. So a couple here on the high end, high growth, or on the left side, the high growth area. Next to that, growth, land grant, and 2 others. And then on the right-hand side, these are funds that by statutory language or purpose need a more stable portfolio, one that flows a little bit more cash. So what we do now is when we get new funds in, we look to see where might they fit based on their statutory language and purpose in our matrix here and try to find a home for them. Then they get a very similar or the same allocation as every other fund in that category. So you can see here for behavioral health, if you look in the growth category, it's highlighted there in orange. The statutory language and the purpose of the fund look very much like the land grant permanent fund, and therefore we recommend an allocation that's similar, or actually is the same as the land grant. And then if we flip, my machine's just a little slow here. 60? Yeah, okay, let's try 60 then. There we go. Same matrix, but our second fund seems to fit best in the enhanced liquidity category. So it's getting the same allocation as the other fund that's there in the enhanced liquidity. That's again based on the statutory language and the purpose of this fund. So on this fund, we're having an expected compound rate of return of 6.4%. And a nice yield of 4.3, at least a nice yield relative to today's interest rates, with a max drawdown that's fairly conservative, gives it a little bit better return in exchange for greater drawdown than the two categories to the right. If we go back to 54, and sorry for jumping around on you here, let's go down to the bottom of that page, and you can see for behavioral health an expected compound rate of return of 7.1 with a slightly lower annual yield at 3.2%. But in exchange for that growth, we take a greater one-year drawdown risk. 26.6 is the estimate. So those are the two recommendations, Mr. Chairman. And we'll take any questions or go through any of the other material that you'd like.
Great. We can open it up to questions from the council. Any questions on our strategy asset allocation for behavioral health trust fund and the MTF? That's the Medicaid trust fund. Medicaid. I just have a quick question. So with these drawdowns in the first year, are we at risk? Because I know you have to kind of let things build up and grow with the rate of return and all of that within our portfolios. Are we going to be drawing down more into sort of like the trust corpus, in this first year and at the early stages of these investments? That's possible. So I heard two questions there on the drawdown we're talking about is drawdown to market value. So that's if the stock market goes down 35%. We'd expect a pretty big drawdown on particularly on the growth funds. That would just be a drawdown in market value. In terms of drawdown in the assets, in terms of making distributions. Yeah, it's possible, but it would only be in the first year or two before returns overwhelm that, and we would only be spending. Okay, great. Just wanted to make sure that if there was any concerns there. So, any additional questions?
Just one question, Chairman.
Okay, go ahead, Madam Treasurer.
On the trust, Medicaid trust, have you gotten any numbers as estimates of what's going to be the amount you're going to get on June 30th, July 1st?
Yes, we have. Where's Dawn? You were telling me.
Madam Treasurer, we will not receive anything in the Medicaid trust fund in July because there was no initial appropriation. The first amount that it will get is in October, and it will be whatever state agency budget reversions are in excess of $110 million, and that is anyone's guess. There's really no real way to get an early estimate on that. Our closest bet of getting an early estimate is through the consensus revenue estimate that comes out in August, so we'll be watching that really closely to see if LSD and DFA have any early looks at what those reversions might be. But even then, those amounts tend to not really be known until they happen, but agencies aren't really sure what they're going to have to revert. There will be a distribution next year of revenue, 50% of the revenue that comes from oil and gas excess windfalls, but like we were estimating, that would be relatively small.
Thank you.
Were you able to hear that, Madam Treasurer?
Yes. Thank you very much.
And on that point, your last point, I was just curious, is the legislation based upon sort of the similar mechanics that we have with the early childhood trust fund, kind of once it exceeds a certain level of oil and gas revenues, it flows into the new Medicaid?
Yes, Mr. Chair, part, so it's the exact same mechanic of the calculation that goes into the early childhood trust fund, and what this does is say for 3 years, so FY 26, 27, and 28, half of whatever that amount is that would have gone into the early childhood fund, half will go into the Medicaid fund of one of those revenue sources, half will go into the behavioral health fund of the other, so the school tax and entitlement. The same calculation of excess above a 5-year average for those two.
Thank you, Dawn, for that clarification. Anything else? So we can move on to the presentation of the investments that were just approved under the consent calendar. We needed to, again, have those approved very rapidly so that we had a quorum in place. And so now we'll invite Mr. Cassidy and Mercer to present information on the New Mexico Strategic Venture Capital Program, Playground, and it was a $50 million investment with Playground and Next Generation Compute SMA. I'll turn it over to you all. Welcome.
Thank you, Mr. Chairman. I'm just going to make some high-level comments at the beginning. We have a long agenda, which I appreciate your patience for. Let Richard walk through all the individual investments and just make some comments. We have 10 managers this month, 5 of which are related to the Strategic Venture Capital Program. As a reminder, this is a 3-pronged strategy that the board approved in April. One being a very deliberate sector focus on sectors where New Mexico has a right to win and where there's evidence of local strength, and that's particularly in deep tech, climate tech, aerospace defense. And as John Clark mentioned, XGS is one example of what that potential could look like in advanced energy. And this month we're going to talk about quantum technologies and next-gen compute with our partners at Playground and why we believe there's an opportunity set for the state there. So 4 of the investments this month are commitments to groups that are really kind of the best of breed in deep technology investing. The second leg of the strategy is support for the development and creation of what we call company creation engines, which is really accelerators, venture studios. We funded a number of them over the last couple of years, the first being Roadrunner. We followed that up with a relationship with Antler Global, which is a global startup accelerator that now has a presence in New Mexico, as well as a group called Up Partners that really kind of invests at the intersection of mobility and climate, and they have a presence in New Mexico as well. And what we're proposing this month is to deepen the relationship with Antler, New Mexico. They have a ton of demand from very high-quality founders to operate in the state, to take capital from them. And a new initiative is this Playground Next-Gen Compute strategy, which we believe can hopefully meaningfully advance New Mexico's leadership in the quantum computing ecosystem. The third leg of the stool, which we haven't done yet, but we plan to propose some investments in future meetings, is really targeted investments to support building manufacturing facilities, projects, and things in the state. And that's really where job creation and real economic developments really starts to happen. Our first investment in the agenda is Playground Global. It's a combination of what we call fund commitments, where it's 2 re-ups and funds we're already in, and what we call New Mexico Specific Incubator, which is the New Mexico Next Gen Compute. I'll pass it on to Richard to go through it.
Thanks, Chris, and thank you, Mr. Chair. The SIC previously committed $25 million to Playground 3 and $10 million to Playground Leader Fund. Both funds are contributing positively to the Strategic Venture Capital Program to date on a financial basis. Just as some background, Playground Global focuses on seed and Series A investments in frontier technology companies. One of the differentiators of Playground compared to some other venture capital firms is they have a large facility in Palo Alto where early stage companies can be incubated as they develop their technologies, which really allows the Playground team to stay close to the management teams and more efficiently utilize labs and equipment. The firm is raising 2 funds, Playground Ventures 4, which is focused on the earlier stage frontier technologies, and then Playground Leader Fund 2, which is expected to invest in later stage follow-on rounds in existing playground portfolio companies. And they are also raising a $50 million New Mexico-focused fund called Playground NMSIC Next Gen Compute, which really focuses on quantum computing and artificial intelligence infrastructure in companies that are connected to New Mexico, either through headquartered in the state or having operations in the state. Playground has a very senior team. They're led by 4 general partners with deep industry experience with an average of 39 years of experience. They've previously worked at technology companies. They also have experience starting companies and investing, being on the investment side of companies as well. Since the last fund that we presented to you, Playground's actually added Pat Gelsinger as a general partner, who's the former CEO of Intel. And from a track record perspective, they've generated above average returns. And with that, I'll turn it over to Bruce Leak from Playground and Kendra Perlitz.
Perfect. Thank you. Thank you, Mr. Chair, and thank you, Council. My name is Kendra Perlitz, and I am the CEO of Playground Global. Today, I do have 3 out of our 4 general partners. I have Bruce Leaks in person, and then we actually have Pat and Peter on Zoom that are calling in from Japan, as we were just completing another next-gen computing, networking, and connectivity event. When you really think about those global innovation, we need to think of how can we leverage the global innovation system to really support your ecosystem as we build it out in New Mexico. And so we've had the great privilege of partnering with New Mexico since 2023, but our firm's been around since 2015. And we've enjoyed being able to increase our commitment to the state, our network, and you'll hear both from our partners as well as about some of our portfolio companies that hopefully we'll be able to participate in all 3 pillars of the new investment program. The key to our differentiation, as Bruce mentioned, is the experience of our team, the technical viability of it, the ability to underwrite and to really help guide and be good fiduciaries for the state. And with that, I would like to have Bruce introduce himself, and then we can have Pat and Peter really talk about the Next Gen Computing Fund. Thank you.
Thank you, Kendra. Thank you, Mr. Chairman. It's a privilege to be here and to be partnered with the state of New Mexico. As one of the founders of Playground, we really feel it's important to help drive the next generation of innovation. As a partner and founder, I focus on automation and robotics and the energy transition. And my 2 partners who are currently in Japan, Peter and Pat, are more focused on the future of computing. And, kind of this drive for the specific focus in New Mexico. And so Peter I have worked with for more than 3 decades, while as Richard mentioned, Pat is new to our team, but not new to the industry, spending more than 3 decades in the computing industry, most recently as the CEO of Intel. And I'd like to pass it on to Pat in Japan to give us his perspective.
Thank you, Bruce, and thank you, Mr. Chair, for the opportunity to join today. I'm honored to be joining as the newest member of the Playground team, joining about 100 days ago. And in the 100 days, I've completed 3 investments around our next generation computing. I'm not sure that it will keep up at that 1 a month pace, but we are very pleased with the progress we are making. And for me, at this point in my career, I was looking for a way to honor the legacy of people like Andy Grove, who invested in me, and give me the opportunity to invest in the next generation leaders, builders, and joining Playground as a deep tech guy was a natural fit. I'm deeply technology focused, mission driven, and really see the opportunity to help next gen companies to become great companies. And with the foundation that the Playground team has built across computing, energy, semiconductors, it's exactly where I saw myself in this next phase of my career, and quite thrilled to make that happen. And as some of you may know, I have a rich history in working with New Mexico. I'd consider myself a unique friend of New Mexico. I was involved with the Fab 11X decision by Intel. I made the decision on Fab 9 and the build out of Intel's advanced packaging there. And I see many of those assets as critical to the ecosystem that we're working to build for next generation computing and quantum ecosystem. And I do believe that New Mexico has tremendous assets to be a hub for the future, and anxious to see Playground play a critical leadership role in helping to establish that presence. Today, we had the pleasure of Peter and I announcing our latest investments, Snowcap, a supercomputing logic company here in Japan. And this supercomputing company or superconducting company is one that I think has great opportunity to have relevance and relationship in New Mexico. And this isn't the only part of our portfolio that we do see working with New Mexico. And we see several opportunities, and we have several active engagements already underway today. So with that, I'll turn it over to my partner, Peter, to explain more about our core thesis, portfolios, and the activities with the state.
Thanks so much for the opportunity to speak to you this morning. So I'm Peter Barrett, co-founder of Playground. My particular focus is around the next generation of computation with a particular interest in quantum computing. I'm on the board of SIC Quantum. We invested in them when they were 3 people. $2 billion later, they are constructing the first 2 utility scale quantum computers. These machines are 10,000 times the size of the state-of-the-art machines. And we think it ushers in an extraordinary nexus of opportunity, not only in quantum computation, but in quantum algorithms, in quantum sensing. And we think that New Mexico, especially around collaborative work with Los Alamos and Sandia National Labs, to deploy those new technologies to transform many aspects of industry and commerce. We have probably more engagement with National Labs than any other venture firm, but we are working closely with Los Alamos, for example, on applying artificial intelligence to building next generation accelerators, with Sandia on the Vanguard 2 supercomputing effort with a company called Next Silicon. But we also see broad and deep opportunities to translate quantum and other computational technologies out of national labs into a New Mexico computational ecosystem. We can do this because Playground is unusual in that we're all engineers and we have a team of 40 people, most of whom are scientists and engineers that collaborate with our portfolio companies on developing their technologies. And many of those portfolio companies have history that was, or technologies that were derived in New Mexico national labs. And we think this has applications in computation, in chemistry, in drug discovery and design, in material science. And the availability of these new tools in collaboration with the national labs, I think, can lead to a very large number of transformative startups in the space. I want to talk a little bit about 2 of those companies in some detail. One is a company called XLight, which is currently has a number of co-development efforts with Los Alamos National Labs. They are developing a technology that can greatly advance semiconductor manufacturing, doubling the productivity of fabs, and allowing progress in the size and complexity of devices that are made in those fabs. It is based on a technology that was developed at National Labs, and their ability to create these new semiconductors is derived from the fact they are building the world's most powerful lasers. That technology wouldn't be possible without a collaboration with Los Alamos, but the company also intends to build manufacturing facilities to create the advanced optics which are uniquely available in the New Mexico ecosystem. The know-how and the capabilities directly come out of those New Mexico national labs. And they intend to deploy a facility with approximately 120 people, generating $40 million of economic value in that process. One other aspect of quantum computing is that it is closely related to the superconducting technology we announced today. Again, that is something which is driven by the New Mexico ecosystem, and we see that also creating other kinds of ancillary technologies that aren't directly related to quantum, but are directly related to advanced computation. We're very engaged with the Roadrunner ecosystem. We will have representatives from our team joining various events and contributing to not only these technologies, but developing the broader startup ecosystem within New Mexico. So deeply appreciate the support and the collaboration with SIC in New Mexico, and look forward to collaborations in the future.
Excellent. Thank you so much for being with us all the way from Japan. We really do appreciate you being here and commenting on some of your incredible efforts on, in that sphere of computers, quantum computing, and things that I don't quite completely understand, but this is an exciting opportunity to have in New Mexico and to be working within, like you say, the ecosystem. So thank you very much. Do we have any questions from the council? No questions. Okay. Thank you so much.
Thank you, Mr. Chair.
Well, thank you, and thank you for approving our participation in this next round. We were deeply appreciative.
Okay. Next on the agenda is the presentation, background information on New Mexico Strategic Venture Capital Program, $25 million placement to Root Ventures 4. And Mr. Cassidy, and welcome Mr. Ross.
Thank you, Mr. Chair. So Root Ventures is a new relationship in the Strategic Venture Capital Program. To give you some background, Root Ventures 4 targets pre-seed, seed, and Series A investments in deep technology sectors, which is consistent with what we're focusing on in the Strategic Venture Capital Program. The team has relationships at several research institutions that are based in New Mexico, and several of their portfolio companies actually have developed products that are used by the national labs. The firm was founded in 2013 by Avi Ross and is led by 4 general partners. The team members are engineers by background, which has really helped them get into deals and form relationships with entrepreneurs, because they speak the speak that a lot of these entrepreneurs are used to. They've really built some impressive resources too over their history, from the technical expertise that they have on the team to establishing a scout program and also an engineering blog to create a strong reputation in the marketplace. And post-investment, they really bring several resources to the companies, including help with product development, go-to-market strategy, talent recruitment, and help with strategic decisions. And from a track record perspective, they have several companies that have that outsized performance, that what we look at with venture capital firms, particularly at this stage where you want that breakout performance to more than compensate for the expected losses in the early stage strategies as well. So we're recommending a $25 million commitment to Root Ventures 4, and I'll turn it over to Avi.
Great, thank you, and thank you, Mr. Chair, for having me. So despite being dressed appropriately for the meeting, I am an engineer that usually walks around San Francisco in a hoodie and a pair of jeans. Our background is, I love, deep tech is a word that's thrown around a lot in San Francisco as well, and our definition is our specific definition. The way we define deep tech is we think technical risk is worth taking and engineers are worth empowering. And there's 2 ways that we invest in that space. One is we invest in tools for engineers. We think engineers deserve better software And that's a mechanical engineer, an electrical engineer, a chip designer, a software developer, civil engineer. It doesn't matter what type of engineer you are. As engineers, we have the sympathy of the engineers who are complaining about the lack of advanced tooling that they have. So we fund advanced software for all of those sectors. And our belief is engineers with better tools can solve bigger problems. And the second half of what we invest in is exactly that. Engineers tackling the biggest problems in the world. Whether that's foundational AI, robotics, synthetic biology, drug discovery, medical devices, energy transition, these are places where you need extreme levels of technical talent to be able to get that heavy lift, that high torque, get the train out of the station. And so we invest in these two areas, and we are inception investors. We find the technically talented teams that are uniquely positioned to either build solutions for their peers in software for engineering, or they're able to tackle the biggest problems that truly transform the world. As you mentioned, we've had the luck of being able to work with many of the labs here in New Mexico because we are focused on building those types of tools. Oftentimes, Los Alamos, Sandia, now Space Force have been a magnet for our companies. They have regular routine visits here, and many of the projects I can't even speak of. This is probably the one room I could speak about it, but they are providing things like generative AI to design next generation military and defense technologies, using GPUs to create products that we never thought were imaginable, but now because we have that advanced level of computation, we can design things we never thought were possible. And the same thing goes for next generation of compute. If you want to build the next generation of GPUs or CPUs, you need to be able to leverage the power of massive amounts of computation in order to design those parts. So Quilter is one of our companies. They come out of SpaceX. We funded them to leave SpaceX and build the next generation of circuit board design that's entirely done using AI. And they're in use here at Sandia, and I believe Los Alamos as well. Another is Entopology, which is doing something similar in terms of AI-generated mechanical parts, and they're doing it primarily for the aerospace and defense industry to be able to quickly design our next generation of defense technology. And so when we invest in these two areas, we are doing that specifically because of the background of the four general partners. So my partner, Chrissy, she studied electrical engineering at Stanford and was recruited to Apple, where she ended up leading the original Apple Watch team. I'm not just wearing the Apple Watch today as a prop. Ironically, she does not wear an Apple Watch. I think she probably spent too much time on the Apple Watch. And before that, she was on iPod and iPhone, and then ran hardware at Square. My partner, Kane, was the first engineer at Zipline, which is one of the largest drone delivery companies for long-range drones. Worked at Microsoft and studied computer science at Harvard. My partner Lee was the CTO of Teespring and was at iRobot working on their defense programs. And my background is I'm the oldest one in the group, so I worked on voice over IP handsets, embedded systems, cable modems. If you have high-speed internet at home, I worked on those first cable modems. Studied computer science at Columbia, and to the point of the empathy we're able to provide, we're able to speak to these founders and understand: are you the ones to be able to build it? Are you the ones who are laser focused on success and overcoming those technical hurdles? And we really talk about those technical hurdles as the bottom of the J curve. When companies have no product yet, they have no revenue, the market doesn't yet see what they're capable of building, and it requires that deep technical insight to be able to look at that team and say, this sounds a little bit crazy, but we know that you're the team to be able to pull it off. And the manifestation of that is that we're down at the bottom of the J curve as the deep tech investor of record for these companies. But within 2 to 3 years after inception, they become attractive investments to the top tier generalist firms, the Sequoias, the Excels, the Benchmarks, the Andreessen Horowitzes of the world. And we've been very successful on this path. We know our lane. We know we're really good at what we do, and we've stayed laser focused. And we're really excited to be able to partner with New Mexico, because we've seen the writing on the wall with all of our startups they're gravitating towards New Mexico, because there's clearly a lot of pull from the state, from the labs, to get this advanced technology into the hands of the researchers. And we feel like that ecosystem flywheel is going to create both better support for the labs, but also better support for the startups that are going to spin out from the talented people here in New Mexico working at these labs. So we're happy to be here. We're excited to be able to support New Mexico. You guys have a rich history of deep tech innovation that goes back quite a while, and the future looks bright for being in the right place at the right time for what's happening in the technology ecosystem. I didn't bring in the rest of my partners, but they also they're very proud and excited to be partnering with you.
Well, thank you very much. Any questions from the council?
Just a comment. I found it very interesting, you know, this work that you're doing is so incredible, but you use the word empathy, and we always think about the technology not having the empathy. Are you working to how to develop that? That's integrated into like choosing teams, and you're using empathy, but the human element can't be removed, or
absolutely. At the end of the day, a lot of people in Silicon Valley obsess over the technology and they forget that they're the people who are building it. And you can have a great idea, but if you don't understand the why and the how, so I'm a big believer in the motivations of people. And so I didn't make this up. It's from a wonderful author named Daniel Pink, and he said the great motivating factors are autonomy, mastery, and purpose. And that really leads in well into the startup ecosystem, because by definition, you have autonomy as a startup. No one is there. There's no large board of directors. There aren't many shareholders. And mastery is just, you want to be challenged. And by definition, the area we're investing in has challenges abound. And it's really about purpose and making sure you find somebody who, when the going gets tough, they stick with it and they actually work harder. And that is being able to look somebody in the eye and talk to them about it. And if you just look down at the presentation or you look at the technology and you don't look at the people, you're going to fall flat. I believe you will fall flat as an investor in this space. Yeah.
Any other questions from the council?
Mr. Chairman, I believe I heard that SpaceX was somehow tied to this. Can you explain to me what the relationship is?
Yeah, so we have funded entrepreneurs who have left SpaceX. Actually, 3 different entrepreneurs and one of our junior investors who went on to go start a company was an employee of SpaceX. We have no official ties to SpaceX, but we believe that they're a great incubator of talent, of people who understand how to build very large-scale, deep technological solutions to problems and do so in a capital efficient way, but we have no official ties to any corporation, SpaceX included.
Thank you for the clarification. Thank you, Chairman.
Thank you. And I just had a question. In terms of higher ed institutions that you're looking at working with here in New Mexico, who are you?
Honestly, we haven't yet, but I would love recommendations.
Okay. Great.
And thankfully, Chris and I have built a strong relationship over the years, and he's been a great Sherpa for us in navigating the ecosystem here. And higher ed is definitely a place where we spend time, and we have yet. Most of our relationships here in New Mexico have been at the labs, but we would love to be able to come and give talks at the universities. We've done that at MIT and Stanford, and I taught a class at Stanford, and it's definitely, or I was guest lecturer, I should say. I was not filling out people's homework. I was not grading anyone's essays. But we love being able to support the ecosystem at its earliest stages, and obviously higher ed is definitely the place to start.
That's really exciting. My role on the council is to represent higher ed institutions. I really appreciate that feedback. So yeah, there is quite a bit of interest on the council to see where the universities and students, academic training and internships, partnerships can work to really develop that ecosystem.
We currently are running, so we don't have any interns at Root Ventures. What we decided to do instead was create an intern fellowship, which is a series of dinners that we have at Root Ventures for people who are interning at deep tech companies in the Bay Area. So we have 15 interns. We actually had 300 apply. We granted access to 15, and they come to the office every 2 weeks for a dinner. Some are at OpenAI, some are at Google, some are at Anthropic, and they all come together as interns because I got my start as an intern when I was in college, and I'm forever grateful. Hemi Zucker is the guy who gave me the job, and I'm still in touch with him today because I believe that, it's the future of all of our industries is making sure that young people are really supported and raised up. So I'm excited to learn more about higher ed opportunities here.
Great, thank you.
With that, I'm going to fly to New York for my son's birthday.
Wish him happy birthday for us, and
Will do.
be safe, travel.
Thank you. Thank you very much.
Okay, next on the schedule, we have, I think it's item E, the presentation part of the National Private Equity 75 million Green Oaks Capital Opportunity 6. And Mr. Cassidy and Mr.
They will, the folks from Green Oaks will be joining by Zoom, just.
Okay.
Yeah, thank you, Mr. Chair. This is a national program recommendation. I was in the middle of the Strategic Venture Capital Program recommendations. But Green Oaks is a new relationship in the National Private Equity Program, and we view Green Oaks as a high-quality manager and pleased that the SIC received an allocation to this fund. Just to give you some background, Green Oaks is a late-stage venture capital fund focused on software and tech-enabled internet companies. I think what differentiates them in the marketplace is a data-driven approach to evaluate founders. I mean, they really utilize this data that they gather on companies and founders to find the companies that are led by strong founders that have the potential to be breakout successes and potentially part of the S&P 500 someday. This fund, the firm was founded in 2012 by Neil Mehta and Benny Peretz, who previously worked together at D.E. Shaw. The firm now has 9 investment professionals, and they actually have a dedicated team of research professionals as well to help with this investment strategy. Performance has consistently been above median and several funds in the top quartile. And they actually have a number of outperforming companies as well, which is good to see considering their late stage venture capital focus. Of note, with alignment, they do have an above average commitment to the fund, which we like to see for strong alignment with limited partners. And we're recommending an up to $75 million commitment to Green Oaks Capital Opportunities Fund 6. And I believe on the line is Neil Mehta and Alex Gwynn from Green Oaks for a short presentation.
Yes. Great to see everybody. Thank you for that. And nice. Sorry not to be there in person. I'm happy to jump right in if that's all right. I'm Neil Mehta, and I'm along with Alex. 2 of us are from Green Oaks. Maybe I could start. So we started Green Oaks in 2012 with a really simple goal, which was to build a Hall of Fame track record over decades. The best way we knew how to do that is find great companies that they themselves can compound over a long period of time. Our core thesis, and there's lots of different ways. I was just looking at the agenda, lots of different ways to make money in the world. Our core thesis was that a bulk of value creation in the decades ahead would be captured by companies that leverage technology to create new value propositions that delight customers, new products, new experiences that could capture new industries and replace legacy incumbents. That was our thesis in 2012. It feels even more obvious today. The hard part for us has been the hard part for anybody is separating the vital few that will drive most of the value from the vast majority of the trivial many, the thousands of companies that start, that raise money, that get a little bit of traction, but eventually in the end don't matter. And what we've built at Green Oaks is a team and a process and a set of systems and capabilities that allow us to sort between the vital few and the trivial many, and sort of separate the noise from the signal, if you will. That's what we've been doing over the last 13 years. We're over a decade now in, we've compounded capital at a really high rate of return, with all our funds performing in the top quartile or top decile of venture funds. More importantly, we've done it with an incredibly high hit rate, reflected in the quality of our portfolio. We've built strong reputations with some of the best founders of our generation over the last 13 years. Companies like Stripe, Coupang, Rippling, Wiz, Scale, which is a New Mexico founder, Alexander Wang, and many others actually. A few things I'd like to highlight. First is that we're fundamental cash flow investors. I know you have a big portfolio of venture and a few growth managers as well. We are focused on figuring out which businesses are going to generate significant amounts of free cash flow in the future, even if they're losing money today. We love studying the business model. We go deep with customers. We try to see around corners to understand how the industry will evolve. And we're trying to figure out what will result in competitive advantage, shared scale economies, counter positioning, cornered resources. These are just adjectives I'm using to describe the characteristics of a business that allow it to produce unfair amounts of free cash flow over a sustained period of time. We think we could find a handful of these businesses each year. We look at north of 2,000. 1,900 and something of them will live and die without ever producing a dollar free cash flow, but a small number will produce inordinate amounts of free cash flow. They'll go on to become the next Microsofts, Googles, Facebooks, NVIDIAs, and so forth. We think a lot about competitive advantage in that form. The second is we operate as one team, which is a little bit unique in our space. We care deeply about concentrating our focus and our resources on being the best partner in the world to a very small number of companies. So we have about 12 to 15 companies in a fund. We're pretty concentrated. We're very selective about who we spend time with and how we spend time with those people. We spend months sometimes studying a single business before we even engage with the founder for a first meeting. So kind of different to how one might think about traditional venture capital, where people are doing dozens of meetings a day. We might only do half a dozen meetings in a week, but we've prepared quite a bit in advance for those meetings. We know exactly what we're looking for. A first meeting with Green Oaks should feel more like a fourth or fifth meeting with anybody else. It's sort of a breath of fresh air because someone truly understands and cares about your business, not just going through the motions repeatedly. The last thing I want to mention, or the second last thing I want to mention, is that we operate with an incredible amount of alignment. We're a single-threaded team. We own the portfolio together. I take every first meeting, and it allows us to move with rigor, intensity in what is a highly uncertain market. What I just described is the refinement over a decade plus of process engineering to make Green Oak sort of the unequivocal partner of choice to the best founders in the world. But I'll pause there and happy to answer any questions.
Great. Any questions from the council? No questions? Anything else to like to say? No? Okay. Well, thank you for being with us today, and we'll move on to the next item.
Thank you.
We appreciate you being here with us.
Thanks. Bye.
Okay, the next item is the New Mexico Strategic Venture Capital Program, $35 million, DCVC 7, new fund series with an existing manager.
Thank you, Mr. Chair. To explain that new fund series with existing managers. So last year, the Strategic Venture Capital Program committed $50 million to DCVC Climate Select Fund, which focused on deep technology investments related to global climate solutions, including energy transition and water. DCVC 7 is the firm's flagship fund. It focuses on deep technology across numerous subsectors within deep technology like AI, robotics, space, computational healthcare, defense, and cybersecurity. The firm has a portfolio company based in Hobbs, New Mexico, and also has other companies that are operating in the state of New Mexico right now. We like that DCVC has a large and experienced team with a variety of experience. The team is a mix of investment, technical, scientific, and operating backgrounds. And the firm has really augmented its team with a team of operating partners as well that can help support portfolio companies post-investment. From a strategy perspective, the firm has an established sourcing process. In addition, they have what's called the Alpha Program, which focuses on smaller investments as well to invest in earlier stage companies. Post-investment, they'll provide support on both technical and company building issues. Examples include regulatory guidance, introductions to other industry leaders, fundraising assistance, building syndicates, and communication strategies. Performance has been good across the last 5 flagship funds. They also, sticking with the same theme, talking about venture capital, have several outperforming companies, which is one of the hallmarks that we like to see. So we're recommending a $35 million commitment to DCVC 7, and turn the time over to the DCVC team.
Great. And are we going to get the deck up there? Perfect. Good morning, everyone. Thanks for taking the time to hear about DCVC 7. So DCVC, we are a leading deep tech venture fund. And if we can go to the next slide, that means we produce returns for LPs by investing in things like rockets and satellites and molecules and microbes and robotics. If we go to the next slide, I realize we have a short amount of time, so I'm going to go do a roller skate tour and pause for questions at the end if you guys want me to follow up on anything. So I've said deep tech. So what is deep tech? Deep tech means we back entrepreneurs who are solving hard, real-world problems using advanced AI, applied AI. This means we look for entrepreneurs with a proprietary data set, as well as that are using advanced computational approaches to operate on that data. And if we could roll the next slide. And using these deep tech models, we've successfully backed entrepreneurs disrupting sectors within all of these bubbles on the screen. And the way I think about it is, how does a small startup hope to compete in these sectors? These sectors have been around for decades or hundreds of years. Many of them have installed fully depreciated, trillions of dollars of installed fully depreciated infrastructure. So as a small startup, how do you hope to compete with one of these incumbents? It's by applying these clever deep tech models and doing things 10x, 100x, 1,000x better. If we could roll to the next slide. And then, transitioning, our deep tech models map incredibly well to the New Mexico innovation ecosystem. I'll just pause. This is a picture of my portfolio company, advanced nuclear fission company, Oklo. They just sent me this picture in an offhand way. This was from a day of doing some testing at Sandia National Labs, working on their heat transfer for their fission reactors.
Mr. Chairman, I'm sorry to interrupt, but can we please see whatever screen you guys are looking at? And we also can't see presenters when they're speaking. We see two different angles of staff and the council.
Can we share this? Can we share this?
We're checking it. Mr. Chair, Madam Treasurer,
There we go.
we're checking for anything in this deck is confidential information.
It is?
Yes, confidential.
Okay.
Yes, Madam Treasurer, we're not able to share this deck, but
It isn't delicate.
but it's in diligent, and you should be able to.
Slide 257.
But Chairman, whatever they're showing on that screen, anyone can be there in a public setting in that public room. What are we talking about? And if it's in the deck, just tell me what page number.
Page 257.
Thank you.
You need me to move to...
I'm on there.
No,
We got it, okay.
the Blair Witch thing.
Can you see, the members online, can you see the presentation and the presenter? There we go.
You can see the screen on the presenter. Well, now the presenter.
Great. Okay. Sorry about that, guys. Hi, everyone. So just, going back just a half a click, our deep tech investment thesis maps incredibly well to the New Mexico innovation ecosystem. As I was saying, if people can see on slide 257, I'll be sure to call out the slide numbers. This is a picture of our advanced fission company, Oklo, doing some testing at Sandia National Labs. The CEO himself is actually from New Mexico, so this is just kind of a good embodiment. We also have some portfolio companies headquartered here that I'll touch on later. But what is it about New Mexico that maps really well to our thesis? It is this strong institutions. There's the national labs, there's educational institutions, that is just actually a great source of intellectual property, favorable political environment, favorable business environment, and just terrific workforce. A lot of our companies pull from oil and gas industry workforce, and that's actually ready-made workforce for here. This is sort of in things like geothermal power. If we could roll to the next slide. And then, I like to think of, slide 258. I like to think of this also from the ground up, right? You know, we are facing a lot of issues at a societal level, and these are sort of, we call these secular hypertrends. There's energy demand growth is a good example of one. These are sectors we've actually been investing in for a long time. We've been investing in these deep tech models for 15 years, and you can see there on the slide some of the parentheses. We've been investing in the energy demand growth issue, and we think that, you know, since 2018, and we think that deep tech really offers profitable solutions to some, not all of the world's problems, but some of these really pernicious problems we're dealing with. If we could roll to the next slide, and I'll just back in terms of the history, we've been, you know, obviously AI is having a bit of its public moment right now. It's something we've been backing since the origins of our fund 15 years ago. So this is stuff we've been working on for a long time. Our first AI-enabled life sciences platform company investment was in 2011. Our first AI-enabled energy tech investment company was in 2012. So this is stuff we've been working on for a long time. You know, in the interest of time, I'll just say robust team, as Richard mentioned, you know, in the lead up to it. If we could roll to the next slide. And I think we can skip this slide as well. And yeah, quantum strategy. Obviously, DCVC, as a fund, we've been investing in this, and as a broader fund, our team has been investing in this for over a decade. Quantum computing, back then, it feels like that might have been a little bit early, but we feel like quantum is really coming into focus, and that will be a continued investment theme for DCVC 7. As we were talking just out in the hall, I feel like there's a lot of the theoretical problems are solved, or they're understood, and now these are becoming engineering problems, which we think this makes it a terrific investable case for DCVC 7. We know that there's good overlaps in terms of the emergent quantum industry with New Mexico. And if we could roll to that was slide 261, sorry. If we could roll to the next slide, please. And then I'll dive quickly on slide 263, if we could just dive into a quick portfolio example. This is our portfolio company, Aquafortis, headquartered in Hobbs, New Mexico. Aquafortis is a next-generation water company. It is a company with an advanced treatment process, and I'll go into that a little bit, for treating and purifying water in a way that's much cheaper and much more available than was previously thought possible. And obviously, increasingly water and being able to add water back to the system is becoming a big constraint on business, globally and particularly in the U.S. And obviously, big use of water right now is in building data centers, but it's important for all of industry. And initially, Aquafortis is focusing on produced water. So, most oil companies in the Permian, for every barrel of oil they produce 10 barrels of water, which needs to be treated and disposed of. So they say that, the oil companies operating in the Permian, they're really water companies with an oil byproduct. How does Aquafortis do this? They have actually a system of solvents where they can really treat this produced water and make it clean enough to put into data centers or into agriculture rather than have to be pumped back underground. So it adds water back to the system, and they can actually treat it better and more cost effectively than sort of the existing pumping. So it's kind of a godsend for the industry that's really starting to come up against some physical limits for disposing of produced water. So that is kind of a high level on DCVC. I can go as deep as anyone wants to have any questions, but I'll pause there to see if you guys have any questions.
Any questions from the council? Hearing none. Thank you for your presentation.
Right. So I would say that, we are deeply grateful for your engagement on DCVC, or your investment engagement on DCVC climate, and we look forward to continuing the dialogue on DCVC 7. Thanks, everyone.
Thank you all.
Mr. Chair, if I may make a request, can we take a break for just a few minutes so we can switch over to the public version of the book so that we are able to share the screen with our members online? Is that okay?
That sounds good. Let's take how long do you need?
3 minutes.
3 minutes. 5 minute break.
Perfect. Thank you, Mr. Chair.
Sure.
All right, everyone.
Yeah.
Where do you have it?
I think he does.
How are you, Ryan?
How are things? Good.
it on your SharePoint or something?
No, it's on the left.
My intention was to keep my comments a little bit more brief than that, if that's okay with you guys. Okay.
Yeah, so our website.
Do our best. Okay.
They have access to the deck.
Yeah, or SIC.
Yes. I would imagine that's the case that y'all refer to it as the first slide of the appendix. I don't know if there's a different order, and will they have my order, like if I refer to the number?
SIC.state.nm.us.
Yeah, that's fine. Keep well. Utah. Yeah. Good stuff though. Yeah. Strong. Yeah. He exited off from there, so we'll have to check on it.
We're gonna be here.
A little bit.
And then we're gonna be
Part of the reason for the agenda. Oh, really? Correct.
yeah, everything here can be shared. Thank you for your patience.
Okay, we should go, Mr. Chair.
We're not gonna employ about this. That'll be from the line.
Okay, we can get back to our agenda, and next we have the presentation for the, New Mexico Strategic Venture Capital Program, $50 million Antler, U.S. New Mexico. This is a top-up. And Mr. Cassidy and Mr. Pugmire with, representatives from Antler. Thank you for being with us today.
Thank you, Mr. Chair. Yes, this is a top-up. In October 2024, the council approved $15 million to Antler U.S. New Mexico, which is a separate account managed by Antler that's focused on New Mexico-based companies, alongside the program's commitment to Antler U.S. Fund 2, which is their main venture capital fund in the U.S., which was done in August of the year before. Based on the deal flow that they're seeing from founders in New Mexico and also companies willing to move to New Mexico, we're recommending a $50 million increase to the fund, making it a total of $65 million. This fund specifically is focused on seed, Series A, and selectively Series B investments in New Mexico-based companies, either companies already in New Mexico or companies that are moving their headquarters to New Mexico. Antler's made impressive progress on their investment activity and overall activity in New Mexico, even just beyond the investment activity. For example, they've brought more than 60 Antler U.S. portfolio companies and Antler U.S. staff to New Mexico for 2 retreats. So really showcasing the state to those that could potentially open operations in New Mexico at some point down the road. The team overseeing the fund is the same as the U.S. fund. Fund terms are also largely the same. I think one of the key differentiators that we talked about last time is this fund does tend to be more concentrated in New Mexico companies, but it is part of a broader program with the Strategic Venture Capital Program, so we've diversified from that perspective, and also the team is also aware of that and has a high bar on what they're looking at to invest in this fund. So with that, I'll turn the time over to Ryan Somerville and Cash Allred from Antler.
Thank you, Richard. Good morning, everyone. Ryan Somerville, General Partner with Antler U.S., joined here by my colleague, Cash Allred, who's on our investment team. He's also based in Albuquerque and leads the support for founders that are based in New Mexico for us. So thank you all for the time to present and really appreciate the continued support and opportunity to expand our relationship. The proposal we're here to discuss today, as Richard mentioned, is the top of the existing fund. So the original intention for us was to make about 4 net new investments per year into New Mexico qualified companies. We began that initiative in January following the close of the fund in October of last year, and up to this point, we've already made 4 new investments. And perhaps more importantly, we've observed a pipeline of companies that are in diligence with us now that really exceeds kind of the supply of capital that we have in the fund. So in our view, the pilot phase of this fund exceeds expectations in terms of the quality of companies we're seeing, but also the sheer volume of opportunities we have an opportunity to invest into. So alongside the SIC, we began planning for an expansion of that fund a few months ago. As a reminder on Antler generally, so we have large global operations, so 27 locations around the world. But we're a fairly decentralized model, so we're operating in local nodes that kind of roll up into this larger organization. We recently became the world's most active investor in terms of volume that we see. To give you a point of contact on that, we had about 14,000 applications for founders to apply to our programs only last year and only for the U.S. The number globally is much larger. And we're expecting about a 20,000 kind of volume and run rate applications this year, which is quite considerable. So given that, the volume that we see at the top of the funnel really kind of expands the opportunities that we see for New Mexico qualified companies, and that's part of the reason that we're here today. To give you kind of some examples on the teams that we're investing in, so 3 of the 4 investments we've made out of this vehicle have been companies who are actively expanding to the state, where 1 has been a local investment that we made at the point of investment. They were already headquartered here. And I think it's useful to kind of notice what these companies are solving for in the state. Beyond the fact that they're New Mexico qualified, they're solving real problems for the population here. So one of those companies is working on essentially drug discovery to develop novel therapeutics. One of them is working on streamlining the process for folks to get access to clinical trials. So think, late-stage oncology patients who are looking for different treatment options. The local one actually is working to solve the heart disease epidemic, starting with New Mexico and then expanding that nationwide. And then one that I highlighted specifically in the presentation is focused on housing. So this is a case study we highlight there, a company called American Housing Corp. They're on a mission to essentially solve the housing crisis from a supply perspective in New Mexico and then expanding that across the country. So their approach is essentially to build housing much more efficiently and at a higher scale by manufacturing units in their warehouse and then shipping them and then assembling them on site. One of their founders is actually in town tomorrow to look at actual sites for their first development. So with this opportunity, we can really expand the impact as well as the kind of urgency they have to expand to Mexico. So again, kind of based on the pipeline we have for additional investments, we think we can really increase the impact that we're having here. We view that both in terms of economic development as well as solving these specific problems from kind of healthcare to housing. So, beyond investing, I think Cash has done a phenomenal job on the operational side of the house here in the state as well. So we've coached over 100 local entrepreneurs that we've been evaluating and adding support, kind of agnostic of our opportunity to invest. We've held an offsite, as Richard mentioned, so we do that once a year. We bring north of 60 companies to the state. That's proven to be a very useful tool in kind of advertising New Mexico as an opportunity, and we've seen founders relocate post that offsite. So we found that to be quite effective for us. And then Cash has established a physical presence in Albuquerque where our founders are able to work and build out of. So we feel that we've accomplished a lot, but we're just getting started. With additional funding, we feel like we can really amplify, these efforts. So with that, thank you again for all of your support and welcome any questions.
Great, thank you. Thank you very much for being with us today here. And we'll open it up to questions from the council. Do we have any?
Chairman, oh, go ahead, Member Allen.
Madam Treasurer.
Just a comment. Thank you for explaining how
Member.
it's impacting the state. I appreciate that.
Absolutely.
Yeah, and I'd like to support those comments. I have seen Antler have a very visible presence in the state, so I commend you on what you're doing here. I was really happy to see you all join with the New Mexico Innovation Hub in that effort. I think that's going to be a pretty exciting thing for the state. And so it's, really what I think a lot of us on the council want to see is that our investments are going to companies that not only want to provide a great return, an exceptional return back to the state, but also to help develop that ecosystem where we can take advantage of all of the strategic opportunities in New Mexico to really lift up the state in terms of economic development and those things that coincide with our investments. So thank you very much.
Absolutely.
On that. Anything else?
Chairman, I know we're short on time, but I did want to thank you guys for this one. I like a lot of the deals that have been very thoughtful in this process for this meeting. But this one touched home in a very different way. And so I just wanted to thank you guys for not us only investing in you, but you investing back in New Mexico.
Absolutely. Thank you.
And that was Madam Treasurer. So thank you, Madam Treasurer, for those comments, and thank you all for being here.
Thank you all.
Okay. We have the next item is the New Mexico Strategic Venture Capital Program, $50 million aggregate for Coastal Ventures, 9 CG and OP3, and this is a re-up with Coastal Ventures. Turn it over to you, Chris and Richard.
All right, thank you, Mr. Chair. So, Strategic Venture Capital Program committed $75 million to Coastal Ventures in their previous series of funds. Coastal Ventures is actually one of the founding members of the New Mexico Venture Capital Consortium through Roadrunner Venture Studios as well. They've led a seed investment in a company called Spiritus, which has raised over $40 million through its most recent funding round in March 2025. So they've been also quite active in New Mexico as well. Coastal Ventures founder Vinod Khosla is one of the more successful investors in the industry and a central figure to the firm. There are 4 additional managing directors as well at Coastal Ventures. The strategy is really a continuation of the prior funds too. They focus on seed and early and then also mid and late stage investments in venture capital. There's a multi-sector focus, everything from consumer, enterprise, deep tech like AI, manufacturing, and robotics. They have a strong network of universities, labs, and repeat entrepreneurs that they source investments from. They have a real strong brand name out in the venture capital community as well. And post-investment, they really work alongside management teams to make sure that they have the resources they need to build and grow their businesses. From a track record perspective, majority of the funds are above median, with many in the top quartile. And this fund also has good alignment with limited partners through a sizable general partner commitment to the fund as well. And so we're recommending an up to $50 million commitment to the 3 Coastal Venture funds in the series. And with that, I'll turn it over to Peter Buckland from Coastal Ventures.
Hello, good to see you. Thanks for hosting me. I was here a couple years ago and some familiar faces. So quick refresher on Coastal Ventures. We've been around for about 20 years. We have about $16 billion of assets under management. You have 6 vintages now. We're investing out of Fund 8, Fund 2, and Seed F, and moving into the next set of vintages. The way I usually describe us relative to other venture capital firms is in the following way. So we do think of ourselves as a diversified firm, meaning that we invest in multiple sectors.
what I would consider traditional venture capital, which is kind of consumer, fintech, enterprise software, SaaS enterprise software, and then what people now call deep tech, which runs the gamut from kind of AI to manufacturing, robotics, climate, and most of the things that we do in health. That builds a very diversified portfolio that over time we think tends to outperform, especially things that end up being sector specific. And we've had a really great run on the kind of traditional side. We've been investors, early investors in Square, Stripe, Affirm. You guys have probably heard of some of those. But what really makes the firm different is our technical capacity. We have 10 PhDs on the team. We have another 20 plus advanced engineering degrees across the investment team and the operating partner team, which really puts us in a position to take deep dives and underwrite very difficult technology. The way we kind of mitigate the risk, at least as we think about it, is that those are areas that are going to disrupt very large markets. So we know that if the technology works, that eventually the market opportunity is enormous. On the deep tech side, we have a long track record of success there, including OpenAI and a couple other things that you guys have probably heard about. But we continue to be very excited about that sector. We have a couple of efforts in nuclear, actually mostly in fusion, called Commonwealth Fusion. Obviously, Los Alamos has been involved in that space for a long time. We continue to be very excited about the opportunity to continue to work with the lab and the infrastructure that your team has started to build here in New Mexico, which is really quite compelling. It's actually very difficult to build that kind of ecosystem, and it takes time. So we're committed to continuing to invest in that ecosystem. We try to get out here at least once a quarter and try to participate with teams in other ways. As you mentioned, we have invested in a company called Spiritus, which is based here in New Mexico. One of the co-founders was, forget his title at the lab, for about 10 years. He's the one who fundamentally invented this technology. It's a carbon capture company we feel is important, and most importantly, which is kind of one of our techniques in the tech space, we believe has the opportunity to be economically viable on a non-subsidized basis, which the current administration is pretty important. So I think that's the summary. I don't know. I know you guys have a full slate today, so maybe you have questions, or if there's anything else you'd like me to cover, I'd be happy to do that.
Do we have any questions from the council? Anyone online? Again, this is a re-up, so it's a re-up to a previous investment that the council has made, and we appreciate the relationship. Thank you very much for being here today.
Thank you very much.
Thank you all. Okay, so moving on to the National Private Equity Program. We also have this as a top-up, and this would be a $200 million Mercer top-up with the private investments. And so with that, I'll turn it over to Mr. Cassidy, Mr. Pugmire.
Thank you, Mr. Chairman. If the council recalls, and at the end of 2023, we set up what we call the Principal Investments Program, which is really a real co-invest program. It really serves two main purposes. One, save fees. Co-investments are available to institutions like ours. It's a normal part of doing business in this asset class, and generally speaking, a lot of those co-investments are charge no fees and no carry. And secondly, given the amount of massive increase in pacing that's happened during my time here, given all the inflows from the Permian Basin, it allows us to put capital to work more quickly. So over the last year and a half, we did two ways. We created an SMA with Mercer, and we've done as many side-by-side co-invest vehicles as we can with our partners. So over the last year and a half, we've committed almost $1.1 billion between the Mercer SMA and side-by-side co-invest vehicles. Now these will all be invested over different time periods, but basically the goal we're trying to do here is to have a decent percentage of our portfolio in this co-invest program it'll ultimately drive a lot of fee savings, which will drive increased net returns in the portfolio. In this memo, for the first time, I talk about our goal is to get to 10% of the program quickly as possible into principal investments, largely co-investments, and we think longer term the opportunity sets at least 20% of the portfolio, potentially higher than that. But really, this is just a continuation of what we did. Mercer, we basically filled up the first tranche, first $150 million with deals in the portfolio, and it's just to top up to keep going. The way we think about the Mercer SMA is basically it allows us to be in market for deals where we can't set up side-by-side vehicles with our existing managers. It doesn't, oftentimes, this doesn't make sense because there's not enough deal flow from the managers, but where it's possible, we will do it. But that's not always the case. So it allows us to really kind of focus on some of the smaller managers in our portfolio where that's not possible. But I would say also we're trying to create a portfolio that has a skew towards middle market buyout. That's really where, look at the industry, that's where the majority of the returns are ultimately generated. And we want to make sure that we're covering the market fully with our existing managers. In terms of, other changes, we did, the memo does talk about the revised fee schedule that would incorporate not only this increase, but also the real assets proposal that's about to be recommended by Keith Sable. I think those are the main items, and I'll open it to any questions. And just to be clear, just given this is something that the staff is recommending, obviously, recommend this.
That's an important point, Mr. Chair. Richard didn't change his hat, nor did he change his seat, but SMA, there's a manager in that. So he's acting as, or Mercer, rather, is acting as a manager like the other folks that have presented this capacity that is, I don't want to call it one-off co-investing, but individualized co-invest opportunities. They're talking about that. We've obviously done it here, and the council's approved, and it's worked well, but they're coming back for another tranche. But it's the same capacity when it comes back under the real asset side. In those two parts of our presentation, Mercer is acting as a manager, just like everyone else who presents, as opposed to a
with that. And so let's open it up to questions from the council and those members online. Do we have any questions for Mr. Cassidy, Mr. Pugmire? Is someone talking or no? Okay. Don't hear any questions online. Member Sanchez, any questions? Yeah, I would just like to point out a few things that we discussed in the Council Investment Committee last week. We talked about this investment and really the value it brings to the New Mexico SIC in terms of some pretty substantial fee savings that we get that was mentioned earlier. These are very significant, and I'm not sure if in the packet we have any breakdown of that. Do we, on what page?
We put some illustrative numbers on page 381.
381, there's some illustrative information on, I think like an example of how much savings we would be looking at. That's what really is appealing to me in this relationship. We did talk with Mercer and the representatives in the investment committee to discuss their internal controls over how, that kind of is laid out. And for me, what information was provided was that there are really strong controls and separation of even real activities in this relationship that where described to us in very good detail, and so, that gives me a lot of reassurance on this relationship, and I think it's worth the benefit that we get from it. So thank you all for your efforts here in this type of investment, and it is a really good way for us to be able to make some really, really substantial savings in terms of fees that are related to our investments, which the council has been quite concerned about over the last few years that I've been on the council. So with that, thank you very much. And again, do we have any comments from council members on any of those points? Okay, hearing none, thank you very much. We can move on to our next item. We have a schedule. I'm told we're going to skip through our lunch break. I think that's a wise choice. If you all can plow through with us, we'll move on to the real assets item, $200 million for our Principal Investments Program, SMA, Keith Sable and Mercer is presented. So with that, Keith, thank you.
Thank you, Mr. Chair. SIC staff is recommending the establishment of a $200 million separately managed account with Mercer to invest in real assets in principal investments. The motivation remains the same as what Chris had described for the private equity side. The co-investment programs generally have significant fee savings, and our preference remains doing side-by-side co-investments when the main fund will generate co-investment deal flow substantial enough to justify the establishment of an individual vehicle. However, increasingly we're making investments with smaller managers whose co-investment deal flow is expected to be somewhat more episodic and therefore less predictable. However, given that a manager has passed the diligence process already, it would be imprudent to ignore the opportunity to participate in any deal flow that they may generate. The investment criteria or parameters that you see below on the memo describe how we would seek to invest that portfolio. A couple of other things that I wanted to call out. One, we did some separate benchmarking of the fee schedule versus other opportunities available in the market. We're satisfied that this fee schedule is compelling compared to some of the other alternatives that we had looked at. And then in terms of expected benefits, I want to highlight that this will maximize our ability to capture any accessible deal flow, and importantly, it'll provide an avenue for us to participate in New Mexico-related projects of managers that are not currently in the real assets portfolio. With that, I'll hand off. Richard, did you want to do it? Okay.
Thank you, Keith. Thank you, Mr. Chair. Just to reiterate, this is a similar structure to the private equity fund that we already manage for you. The goal is to invest more efficiently in the asset class and reduce total fees as you're growing your allocation through co-investments. And the plan is to use the relationships that you have to source co-investments. But I think one difference with the private equity portfolio, where we do have a lot of managers to source co-investments from, we don't have as many managers in the infrastructure, so there is up to a limit where we can actually source co-investments from managers that are not currently in the portfolio. And this also opens up an opportunity to potentially invest in a infrastructure investment that has a New Mexico angle to it as well in the infrastructure program that might be from a manager that's not in the portfolio. And to talk through Mercer's resources in this area, I'm going to turn it over to Gurjit Dosanjh.
Thank you, Mr. Chair. Thank you, council members. I just want to follow up on one point that Richard made in terms of the upper limit of up to 25% of funds. 45% may be invested alongside managers that are not in the portfolio. The safeguard there in place is that manager still has to be positively recommended by Mercer. So it's not just any manager, it's someone who's gotten vetted through the process. In terms of our resources, we have a global infrastructure team, north of 25 people that have been doing co-investments in infrastructure since 2014. On average, we're seeing about 150 to 200 deals per year, and ultimately closing on about 5% of that. So extremely selective and an extremely low hit rate, which is what we want to see. And in terms of just, again, in terms of the deal flow that we are seeing, as you can imagine, we have about roughly 10 billion in assets, infrastructure assets under management. So we are able to see a lot of deal flow. And to Keith's point about, this is really designed for those managers that may be more episodic in nature. So where appropriate, we'll continue to recommend co-investment sidecars, but in the cases where that may not be applicable, this is what could be a solution.
Chairman, I have a question.
Yes, Madam Treasurer.
I didn't hear part of what you said, but when you were talking about the managers, you said there's a portion that have already been approved by SIC, and then I didn't hear the rest of the sentence.
Apologies. Yeah, so what that was is the one unique difference between this and the private equity SMA is this will allow for up to 25% investments in managers not in SIC's portfolio, but the safeguard in place is they'll still need to be positively recommended by Mercer.
Okay, and Mr. Chairman, what does that process look like? Is that similar to what Mercer has already been doing for us, but they've done it maybe potentially for other clients?
That's correct.
And Chairman, the only thing I would ask about that is because we're not really engaged in that part of it, I've been really focused on operational risk lately. And so I'm trying to understand what's the balance of us, giving our authority, but also making sure that we're being cognizant of operational risk, especially as it relates to the direct effect on New Mexico or New Mexicans. And so I don't know if that's already in the thought process or in Mercer's process for us, but that's something that I want all of us to be thinking about.
Yeah, Madam Treasurer, I agree. I mean, we do think about it, especially, with managing the strategic venture capital program. We are focused on investments that are going to benefit the state of New Mexico.
Another safeguard in the process is that staff has ultimately a veto over items showing up in the portfolio as well. So this will be a joint exercise from a diligence perspective.
Okay, and I do want to mention my concern is not hesitation to do something like this. I'm excited that you guys are doing something like this. I feel like the more we go through these SIC meetings, the more I feel like the council's being heard on a lot of different things, including diversity, equity, and inclusion, including investing in New Mexico, including diversifying within asset classes, including getting younger fund managers and making sure that they're still up to par, but that we can work on these smaller deals. Like the amount of deals that I've seen that you guys are working on now and how quickly and the smaller amounts, I just want you to know I greatly appreciate all the work that all SIC staff is doing for that, because I know it does take more due diligence. I know it takes more time, and I think you guys are being creative and being able to do a lot of these re-ups and top-ups. So I just wanted to make sure you all know we do see this, and I do want to thank you.
Thank you.
And yeah, I'd like to support those comments from our treasurer. From what I've been able to learn in the council investment committee and talking about the safeguards, I think we have things in place, but let's make sure that we continuously try to improve and are cognizant of any new thing that may have just surfaced that we might need to think about in terms of if necessary a council policy on just making sure that, as the treasurer mentioned, that the public is able to have that reassurance as well. But I really think this is a really important way to address the efficiencies with some of the challenges that we have in terms of, like Richard mentioned, we have an enormous amount of capital that, you know, on the one hand, we don't want just sitting in cash it's just sort of idle. We have to get that deployed out. We have a real important obligation to get that out, but then in doing so, there are things that have to be put in place in order to do that. And we need to be able to do that as efficiently as possible. So I think that helps us to achieve that, and no scenario is perfect, but I think this is a really wise one that really does help to get us to meet a lot of those challenges that we're faced. So thank you all for this, and we'll keep on, looking at these investments and learning about them, and I know the council wants to stay on top of what's happening with these. So thank you.
Chairman, just one quick question on this discussion point. There's something in the document that says, under the idea of Mercer's resources and expertise to manage the program, and then it says NMSIC staff will also retain the ability to veto individual investments. So are they coming back before us just to give us the listing of them, or how does that work?
We expect that before an investment will wind up in the portfolio, Mercer will have done its ordinary diligence process, and I will have had conversations with the portfolio management team at Mercer to discuss their underwrite and any concerns that we might have.
Okay, thank you.
Thank you all.
Thank you.
Good discussion. Thank you. Okay. Next, we have on our full agenda, we have the real assets, $225 million Nova Infrastructure 2 and co-invest. We have our guests arriving now, so we'll give them a minute to settle in. And thank you all for being here today.
Thank you for having us. We're excited to be here.
Yes, take it away.
So, Mr. Chair, the next two investments today are kind of breaking new ground for the real assets portfolio, and that the infrastructure book is largely comprised of larger cap infrastructure investments. Both Nova and Ember, who will follow them today, are middle market to lower middle market investors in the infrastructure space. The clearest analogy to draw would be comparing these managers to the larger infrastructure investments as you would smaller mid-cap stocks to large-cap stocks in the public market space. Nova was formed in 2018 by Chris Beal and Allison Kingsley, who both have been kind enough to join us today. The firm has approximately $885 million in AUM. They do maintain a lower middle market value add focus. They're a broadly diversified infrastructure manager across that space, and they focus on niche, founder-owned and operated businesses, ideally with no leverage or no prior institutional capital. One of the things that stood out, actually three things that stood out from the manager in my view. One, I think they punch above their weight in terms of risk analytics, I guess maybe two. And the other key thing that stood out was they have maintained a New Mexico presence in their earlier vintage portfolio and have been active in the state. And then I think you'll find that they, both of these investments share the fact that they were founded or co-founded by a very compelling female founder. With that, I'll hand over to Gurjeet for any comments.
Yeah, thank you, Keith. So again, thanks, Mr. Chair, council members. Consistent with Fund 1, Fund 2 will seek to invest across environmental services, transportation, energy transition, and energy, as well as digital infrastructure. The team that has been built out is supported by a strong bench of senior advisors. We're also very keen on the proprietary sourcing that's been done, really allowed Nova to come in at really attractive entry valuations. And there's been a strong performance from a track record perspective in their prior funds. So with that, I'll hand it off to Chris and Allison.
Great, thank you. And thank you, Keith. And thank you for having us today. We're excited to be here, and we're excited about the potential partnership with New Mexico SIC. I'm Chris Beal. I'm the founder and managing partner of Nova. Allison and I started the business in 2017.
I'm Allison Kingsley, founder and partner of Nova.
And when we founded Nova, we had a simple idea, which is that as funds and infrastructure were getting larger and larger, and their AUM was growing, in many cases exponentially, that the lower end of the market would be relatively less attractive. And the data showed us as we began preparing to join the fund, to start the fund, that there are actually many, many more opportunities for investments, many more companies and assets in the lower middle market. And so the ratio of potential opportunities to fund investors was quite large. And that disparity would make the middle market less competitive, and thus we could force more proprietary deals and find more transactions that we could enter into at attractive values. And so that's what we did. The opportunity set for Fund 1 proved to be quite large, and we were able to make 100% proprietary investments in Fund 1 at what we think are attractive levels through the combination of people and process that we think provides for the most important and compelling way to invest. People are obviously very important, and Allison will talk about our team, but people without good process, I think, can sometimes miss the mark, and it was very important that we come in both with good people, but with good process.
So we are fundamentally middle market specialists. We do invest in 4 sectors: environmental services, which is waste, water, transport, ports, airports, rail, but all in the middle market, lower middle market, energy and energy transition, and then digital investments. For Fund 1, we had 7 investments. We've exited 2. We do have top quartile returns and DPI. And Fund 2, we're off to a great start. We have 2 investments in Fund 2, and we're growing from there. All of these stay true to our strategy, being middle market, value add, North American focus. We are very proud of our New Mexico investments in Fund 1. We have an investment in the energy transition space in New Mexico. And in Fund 2, we're investing also in the energy transition space in New Mexico. We hope to expand in both of those, our New Mexico presence. We have, as Chris mentioned, built a team of 23 people to date. We are proud of this team. We've had consistency across the team. And they really have operating experience and also financial expertise, both of which are very important for our strategy. We have developed risk processes as well as value-add operating strategy, playbook for all of our investments. And so we're very much a hands-on investor in this space, and it's very much driven by our team and their experience. And so we're happy to say that the strategy did work for Fund 2. We're doing the exact same strategy, same team, same sectors, same geography for Fund 2. And we're excited to be in partnership with you, and we thank all of you.
With that, should we open it up to questions?
Sure, if you are ready.
We're ready.
We will open it up to questions to council members online. No questions? Under anxious. Hearing no questions, I thank you for being here, and I thank you for the information. This is a very promising investment for New Mexico, so thank you.
Great, thank you very much.
All right. Moving on to our next item, real assets, $150 million for Ember Infrastructure 2. Whenever you're ready, Keith.
Thank you, Mr. Chair. We're joined today by Elena Sebastianova, the founder of Ember Infrastructure Partners, and Brad Yankiver, the head of investor relations for the manager. We're seeking to commit $150 million into Fund 2. Ember's focus is energy transition, resource efficiency, and climate resilience. There's a significant focus on water, wastewater, water efficiency, and diversified uses thereof. The focus on water makes them relatively unique in the infrastructure investing space, and so they'll be a very diversifying position to add to the overall portfolio. The founder, Elena, has established a very, very strong 15-person investment management and operations team. The pedigree is significant. All of them, or most all of them, have had prior overlapping experience, significant amounts of that at GIP, the large cap infrastructure play now, and also at Credit Suisse, among some other players in the infrastructure universe. The partners have an average of 22 years of experience, and the team is advised on over $5 billion in the sustainable infrastructure niche. So there's a significant amount of experience in this space, despite the fact that this is just a fund too. One of the unique features of the GP is that they bring extremely strong experience from a structuring perspective, structuring deals to protect on the downside. They focus on businesses that have infrastructure-like characteristics in terms of unit economics, but their investment strategy is focused on growing the penetration of the solutions and services that portfolio companies provide. On account of that growth profile, we're not expecting this fund to generate a current income stream, and so that's different than some of the infrastructure funds that we would have in the portfolio otherwise. I'm going to pause there and hand over to Gurjeet for his comments.
Thank you, Mr. Chair, council members. Again, one thing that's unique about this group is it was founded in 2018. As Keith mentioned, they worked together previously at Global Infrastructure Partners and Credit Suisse, and that type of longevity is something that we think is extremely important. Again, sustainable private infrastructure, lower middle market in North America. The team is entirely based in New York, and it's an experienced and stable senior team, and they have a bench of operating partners that really have a large network on their own. Again, within the three areas, when we're talking about sustainable private infrastructure, we're referring to energy transition and decarbonization, resource efficiency and management, as well as climate resilience and adaptation. So again, it's a well-defined middle market, sustainability-focused investment strategy. And Fund 1, we think, is off to a great start, and we're excited about Fund 2. And with that, I'll pass it off to Brad and Elena.
Thank you so much. Good afternoon, or good morning still. Mr. Chair, council members, thank you so much for having us. Thank you to Mr. Sable and Mr. Desange for your collaboration. I'm very pleased to be here with Elena Spassianova, who is the founder and managing partner of Ember. And on behalf of the team, we're very excited at the opportunity to partner with New Mexico to deliver for your beneficiaries and for the people of New Mexico.
Thank you, everybody, for your time and consideration today. My name is Elena Spassianova. I'm the managing partner of Ember, and I'm honored to be here, and I share that sentiment with the entire Ember team. To take a step back and really give you a little bit of a view of what Ember really does, but most importantly, the people behind what Ember does. We are a purely independent manager, focusing on North America middle market opportunities with controlled equity investments. We do look to invest in companies delivering fundamental improvement infrastructure solutions in decarbonization, resource efficiency, climate resiliency. We do think about our mandate slightly different than most because we do think that through the lens of solution. However, with that being said, with every solution and those three larger umbrellas that I've described, there are particular sectors that rise up and formulate that strategy. And for us, it still comes down to being fundamentally very knowledgeable about the underlying sectors, but our focus on solutions allows us to be very flexible in terms of shifting time and attention to the sectors where we think the market dynamics are much more advantageous than any given point in time. So for that reason, and as Keith pointed out, we actually tend to underwrite a lot of sectors that are relatively underrepresented in the books of some of the other GPs. Water and wastewater is a very big thematic for us. Waste and environmental services is the other one. And then climate, resiliency, and adaptation. And I'll talk a little bit about those, but this is what makes us somewhat unique from that perspective. But with that being said, and going off page 193, there's certain fundamental principles that are completely important to us and non-negotiable, and those come down to the real assets, right? We look for fundamental services. We look for very stable cash flows. However, we do put on top of that growth and value. right? And that's ultimately how we look for that asymmetrical upside and alpha returns in our strategy. We are aligned with sustainability, but what does it mean? The reality is with our growth focus, as our businesses scale and continue to grow, they naturally, volumetrically, is going to have a positive impact in the services they deliver. Whether or not it's the growing volume of wastewater being processed, water being reused, or waste simply being diverted from landfills. That is very positive impact, very direct, and very calculated. But we do not rely on new technologies. Everything is proven. Do not invest as well in sectors that rely heavily on subsidies. Those are all very established businesses. We are a relatively young firm, as you'll see, but we're growing fast. Started in COVID in March of 2020. Wouldn't recommend it to anybody, but as they say, you know, it doesn't break you, makes you stronger, and that's coming down to, you know, the team that Keith alluded to is everybody has a great team, skilled team. We have a phenomenal team, right, that knows the sectors in and out. But what I'm most proud of for the team is that the team that really has not just the knowledge, but the ear and passion for what they do. And that's why starting, I think, in March of 2020 and ultimately getting through it and everything else that came after has been really, truly testament to the strength of the team. We've worked together for an extended period of time. There are members of my team that I work with now 10, 15, and even 20 years, which is exciting and yet scary at times to reflect on. 5 out of 6 senior members that come out of GIP, but you look at that page and there's a lot of logos that are very similar. So even our predecessor firms before that, we have that shared history coming into this. We have a strong bench of operating partners because we do focus on growth and value, and we need to sort of support our portfolio companies in a very strong way. So our operating partners are very helpful, and our corporate services are fully integrated, and we are ready for scale up. And from day one, even though we're small, fund one, we've brought everything in-house and kept it that way. Now, in terms of the how we underwrite, again, real assets is fundamental to our underwriting. We look for those characteristics, and for some of the opportunities, as Keith also alluded to, we're not shy about using structure. We're very experienced in it. We've done it many times before, and so when the situation calls for it, we will structure accordingly. All of our deals are bilateral. We love being in a mid-market space because ultimately we get the benefit of a larger scale of opportunities and still a relatively small number of managers operating in it, which is why probably all know each other. And we are looking for value not just because of the knowledge in the sectors that we have, but being able to support our portfolio companies through capital formation, which we can help them with, helping them execute on M&A. Most of our portfolio companies by now have gone through at least 1 or 2 subsequent M&A processes, very successful, and so we continue to support them through that. And then lastly, I mean, in terms of the solutions versus sector, decarbonization, we started at Fund 1, has a lot of portfolio companies there, but as we saw other opportunities and other attractive points of entry, this is still something where we pay close attention to and ready to move as the opportunity presents itself. But most of our origination right now is focused probably on resource efficiency, climate resiliency. Climate resiliency is something that not many people are familiar with, but stormwater, for example, is one of the good examples in resiliency. And many well-operated businesses, 20, 30 years of operating history is what we're targeting in those spaces. And then on resource efficiency management, it's mostly water, wastewater, and waste and recycling that we spend time on. And with that, we'll look to underwrite distributed infrastructure. And that, simply stated, is solutions that really emphasize to the customers, industrial, commercial, small municipalities. That really helps with looking for that organic growth. We look for infrastructure as a service, and we can pivot businesses towards it because it helps with cash flow profile of the businesses that we ultimately underwrite. And we do like looking for solutions because right teams where the municipalities, utilities are willing to write a very long-dated contract is really where we're looking to underwrite those services being provided. With that, we're truly honored to be here today and to be considered to be the stewards of the capital that you do manage, and I really thank you for your time.
And I'll just highlight briefly that Ember has made investments that have directly impacted the state of New Mexico. In Fund 1, our community solar developer SunShare was the largest recipient of the New Mexico Community Solar RFP, the inaugural one, which took place in 2023. They were the largest awardee. Part of the criteria, of course, is the ability to deliver on cost-effective solar. that is accessible to a broader set of the community. But part of it is also community engagement. So they were awarded well and received the benefits for partnering with the Navajo Nation and Pueblo tribes on workforce training and human services, which they were very proud of. They've got team members who are members of that Native community. And in Fund 2, we've made 2 investments, one of which is called H2O Innovation, which provides wastewater treatment and water reuse, which is hugely important. I think stands to benefit the state of New Mexico greatly. They have delivered treatment systems to industrial customers in New Mexico, and they have an operations and maintenance contract in New Mexico today where they help a community manage with their wastewater.
With that, if there's any questions, we'd be happy to answer.
Wonderful. Thank you for your presentation. Any questions from the council members online?
It looks like the treasurer is trying.
I do, Chairman.
You were on mute, Madam Treasurer. Do you want to restate your comment?
Yes, please. I think this is more up Member O'Donnell's expertise, but this is very exciting for somebody this is not my expertise. On Fund 1, what was the overall amount that you guys raised for Fund 1?
Fund 1 was $341 million.
And Fund 2 was supposed to be 600, but now you guys are about at $1 billion, is that right?
No, that would be great. We're beyond our target and making great progress towards a final close, which will follow.
And in comparison to Fund 1, Chairman, I'm looking at page 8 of your document. Is it going to be very similar on the exposure across the infrastructure growth areas, or do you have a different mindset or philosophy, or is it going to be something equivalent?
It will be something very equivalent in terms of our Fund 1 really proved out the thesis and again, our underwriting approach to the businesses we partner with. In terms of the sectors, as I mentioned, we're definitely shifting more in Fund 2 towards resource efficiency, climate resiliency. That's going to be a bigger focus in Fund 2 versus Fund 1, but just also given the growth that we're seeing in those underlying sectors. But again, same underwriting, same principles, same factors that we're looking in their underlying management teams and what they're able to achieve through growth and our support. Nothing changed.
And this question, Chairman, is I think more for Keith, for staff, is what is considered the dollar amount threshold for a fund that to determine whether or not someone is still considered small. And I'm referring to the confidential documentation basically on the pricing and a comment made that it's still smaller. Is it because it's a Fund 2 or is it because of the dollar amount?
I'm not sure I'm getting the sense of your question. Could I get you to restate that?
I'll ask offsite. That's fine. Thank you.
Thank you for the question. Any other questions online? Member Sanchez? Well, thank you very much for being here with us today, and these are really exciting opportunities for the state, so we really appreciate it.
Really appreciate it. Thank you.
All right, next up we have the private debt, $250 million for Fortress Asset-Based Credit 2.
Thank you, Mr. Chair.
Thank you.
So, just to clarify, this recommendation is for a $200 million commitment to the fund with a $50 million commitment to the co-invest of the fund. Correct. 250 total potential commitment altogether.
Thank you for that clarification. Were you able to hear that online?
Yes, sir.
So we have 200. Okay, good.
So, Thank you, Mr. Chair. Thank you to the council members. I have with me for this presentation today, Mary Bates from Makita, Jill Chains, and Dominic Ruggiero from Fortress. Just real quick, this is an asset-based strategy, asset-based lending strategy that we're presenting today. We presented a number of these asset-based lending strategies prior to this, and so my hope is that the council members are familiar with this type of strategy. It is asset-based lending, one of the few areas in the debt markets that's actually correctly named. It's a differentiator in our view from cash flow lending to at the corporate level. Tremendous potential for underlying diversification in terms of the underlying assets as well as the way in which they pay. With that potential diversification comes a potential fair amount for complexity. So we are looking for managers that have been doing this for a long time, and they understand the lanes in which they are good at. Fortress has been doing this for a very long time. This is a team that's really stuck together. Before I turn it over to Mary, I want to say real quick, we have some specific characteristics in the vehicles that we try to look to invest through. I want to thank Ms. Chains for working with us and working internally at Fortress to help us create those, help create the vehicles with the characteristics that we're looking for. And I also want to say that Mr. Ruggiero is one of the primary PMs. So his stamp will be on really what goes into this strategy. So with that, I'm going to turn it over to Mary.
Great. Thanks, Tom. As Tom mentioned, this is another asset-based lending strategy. It's focused on income. The targeted return objective is 10 to 12% on a net IRR basis. Similarly to past presentations, I'm going to focus my remarks exclusively with respect to what we identify as the strengths as well as the potential concerns and mitigants associated with it, and then turn it over to the GP to go into their investment strategies. So some of the things that we like about this offering, Tom's already alluded to it. This manager has a long track record in the space, dating back to 2006, making them one of the most experienced and tenured managers in the asset-based lending space. Over that time period, they've deployed in excess of $14 billion and effectively have a de minimis loss ratio. So it's a strong proof statement in our experience of their conservative underwriting and strong structuring expertise. The experience and depth of the team is also something that's of note. The team averages over 20 years, over 22 years actually of experience, including 14 years at Fortress. Dom, who is the leader of this strategy, is one of the most experienced professionals in this space. One of the advantages of experience in this space ties back to incumbency. So over 50%, roughly 50%, of the deals that Fortress deploys in this strategy comes from lenders that they've worked with previously. So that re-up ability is a strong advantage in our perspective. We would highlight, of course, that Fortress as an organization is well known for their opportunistic and relative value approach. So in no way would we be implying that they automatically re-up, but we do identify that incumbency as a strong advantage. One of the key differentiators of Fortress as an organization is what they call their asset management capabilities. We would identify that more broadly, tying in part to their monitoring. They're very, very close to their borrowers. They really, in the event that there are problems, they identify them quickly, and they engage very, very quickly in their approach. And that, in part, is because of the strong resources and breadth of resources that they have at the organization, which is actually one of the largest alternative credit managers in the industry in terms of resources in terms of number of investment professionals. Given this is a public session, we're not going to go into the details, but we're quite excited that we were able to negotiate favorable terms for New Mexico, including a co-investment structure, which we think will work well with New Mexico's needs.
and that it is being offered on a fee-free, no-carry basis. Some of the concerns that we would draw to your attention, as well as the mitigants associated with this, is that there are competing vehicles within the Fortress complex as it relates to this asset-based lending strategy. In terms of previous vintages of this strategy, we had not been favorably disclosed to the allocation policy. We're happy that Fortress has adopted more of an industry standard type of allocation policy, and so we think that that identifies it. Moreover, we would appreciate the breadth of the asset-based lending space, and we believe that there's more than significant flow. Also, the fact that the manager is offering the co-investment vehicle speaks to that as well. We would draw your attention to Fortress does have a history with some meaningful ownership transitions. Most recently, Mubadala Capital, in concert with Fortress employees did acquire in May 2024 their equity interest from SoftBank. We do view it as a positive, actually, and we appreciate that Fortress employees and partners have the ability at a future date potentially to expand that ownership. So with that, I'm happy to address any questions or turn it over to Fortress for their comments.
Any questions for Mary? If not, we will hear from Fortress. Thanks for being here.
Great, thank you. Thank you, Tom. Thank you, Mary, and the entire New Mexico State Investment Council for having us here today and the opportunity to work together with you. I'm Jill Chanis. I'm one of the senior members of the Fortress Client Product and Solutions Group. I'm joined today by Dominic Ruggiero, the global head of our asset-based credit business. Mary and Tom set the table very well in regards to Fortress's asset-based credit business and our strengths. Before handing it to Dom, I'll give you a quick overview of Fortress, as I do believe, we're a new entity for many of you. We are a global investment manager managing about $50 billion of AUM across a diversified range of credit and real estate strategies for over 2,000 LPs. As Mary said, we have a large investment team. We have close to 400 investment and asset management professionals in 13 offices around the world, and we're co-headquartered in New York and Dallas. As one of the pioneers in private credit, we began this business in the early 2000s, more than 2 decades ago, and we have since built a platform based on our proprietary sourcing network, our deep underwriting expertise, and, as mentioned, our rigorous asset management process. Our overriding objective is to protect and grow our investors' capital, which we have accomplished across multiple cycles, market cycles, economic cycles, and credit cycles. As Dom will tell you more about, from the early days at Fortress, asset-based investing has been a core tenet of what we do, and it will continue to be. Dom?
Thanks, Jill. Thanks, Mary. Thanks, Tom. And thank you to the council for having us here today. It's a pleasure to be here. I think Mary and Tom did a really amazing job describing the merits of our asset-based credit platform. Just a little bit of my background. I joined the firm in 2016, but I've been in the private asset-based credit, asset-based lending. 2006. Thanks. I've been in the space since the mid-90s, so I've seen a lot, and I actually commend the Investment Council on being front-footed on investing in this space. It's a space that is very topical today. There's a lot of new entrants. There's a lot of different approaches to the strategy. Ours is a little bit more focused, I believe, which I think is important because this is a very nuanced sector. But just reiterating what Mary said, the experience in this space and the infrastructure that we have built is something that I think is very, very unique and very important, and it's going to drive differentiated performance in cycles. Everybody looks good when the economy and assets perform well. Where we really differentiate is when there's disruptions in the economy. And good or bad, we've been through multiple cycles, and we're able to infuse that in our investment acumen and our asset management. We love this space for a few reasons. And it's probably evident to you as well, but there's a lot of control in these transactions. We control assets, we control cash flows. All of these deals are highly, highly structured, where we have early seats at the table to the extent anything is going not according to plan, and we have a lot of downside protection with respect to driving differentiated outcomes. A core philosophy of our team since inception has been alignment of interest, and you will see that how we built our asset management infrastructure to be very aligned. It's a very unique infrastructure that I don't think anybody else has in the space, and how we approach the structuring of our deals. So with that, I think it's probably just beneficial to open it up with questions, and again, thank you for your time.
Thank you for that. To the council members, any questions online?
I have one question, Chairman.
Okay. Madam Treasurer.
Thank you for your presentation. I greatly appreciate it. I'm looking at the percentages of ownership, and I see 68% owned by Mubadala. And is that owned by the government of Abu Dhabi? Or how is this connected to you all directly? Can you give me some perspective?
It's not the government. Mubadala is an independent investing entity based in Abu Dhabi, and they are investing on behalf of family and other constituents, and they have a private investment into Fortress alongside the Fortress equity owners, as Mary mentioned.
Yeah, what I would just add to that is, and Mary mentioned this, over 150 employees at Fortress invested in this transaction. It was effectively a management buyout supported by Mubadala, and the Fortress management team controls the board of Fortress and the day-to-day operations of Fortress without any influence from Mubadala.
Okay, so as far as risk aspects, Tom or Mary or any of the presenters, what are some of the risk aspects that are potentially on the table? Is there anything different than what we've already looked at?
I'm sorry, Madam Treasurer, is that with respect to the Mubadala ownership or with respect to this strategy, just so we're answering that?
Well, I saw to the strategy already, and I feel fine with that portion of it, but I'm not as familiar with the ownership breakdown and how that could potentially be, if there is any type of additional risk we need to be made aware of.
Yeah, I would say generally speaking, I mean, so Fortress has gone through a series of ownership changes dating back to its inception. It was one of the first alternative credit managers to actually go public. It went through an IPO process, and then actually it was acquired by SoftBank, and then SoftBank had some challenges. At that time, Mubadala did actually have an ownership stake in Fortress, and so Mubadala, in concert with the partners at Fortress, essentially bought the ownership back from SoftBank. And so I think one of the things that makes us most comfortable is, and again would defer to Fortress to go into as much detail as they're comfortable with, but they do have the option over time to increase their ownership. And I think that's one of the things that gives us a lot of comfort. And I think there is strong alignment within the Fortress partners, to do so. But Dom made reference to this, and I would echo it. I think what's most important from our perspective is that Fortress, as an organization, retains full autonomy as it relates to the governance and the management, the day-to-day execution of all strategies, as well as any new products coming to market. So I think it's something that we always are cognizant of, but we think that we're comfortable with it as it currently stands.
And Madam Treasurer, I would also add that investing directly into GPs by family offices really globally is a fairly common thing. It's not necessarily the American model. In fact, I've been approached sort of as an incentive to commit to a fund We also have the option of having a passive investment in the GP as well. That's not the American model. You really won't find any pensions or sovereign wealth funds here that invest directly into an entity. There are a lot of operational risk issues that come with that, so we don't do that. But it's actually relatively common to see an ownership interest in a GP, whether it be from an internationally located wealth fund or even a U.S. located entity. It's just not something that public institutions typically go down the road in the United States.
Yeah, Mr. Chairman, that was one aspect of it. And the other aspect was actually the percentage of the ownership. That was more of a concern on my end, as far as if you're ever in worst case scenario, what does that look like when the percentage is in a different country than here? But that was the only concern that I had, or I just wanted to hear your guys' perspective on it. Mary Bates, as always, I appreciate your thoughtful, confidential docs. Thank you, Chairman. Nothing further.
Thank you, Madam Treasurer.
Thank you.
Thank you. Any other questions online? Mary, thank you all for the information in the packet. It's very, very thorough. So thank you very much.
Thank you.
Thank you for being here with us today. Okay, I understand that we do not have presenters for the items on the consent agenda, on the original council agenda. So I would just ask if there's any questions on those items from the council members online that the SIC management can answer.
So Chairman, just so I'm clear, because I wasn't here at the beginning, we have the 100 million from Arlington Capital Partners 7 a re-up, 50 million CRV a re-up, 100 million from Lead Edge Capital 7, and 250 million for Sandbrook Climate Infrastructure 2 and a co-investment re-up, and 35 million aggregate playground ventures. Is that still accurate?
That's correct, and Icon was removed.
Okay, and then as far as, because we did hear from Playground on the venture side, how is this one different from what we heard earlier?
Madam Treasurer, Director Chris Cassidy is coming over to the microphone to answer that.
I can't remember. I think the idea was, given the SMA was a new investment, they put the re-up in the consent agenda. But we basically presented all three when they were here earlier.
Okay, and then Chairman, on the 250 million with Sandbrook Climate Infrastructure 2 and co-investment, is the 250 a combination of the co-investment, or what's the breakdown of that dollar amount, and do we already have something with Sandbrook?
Madam Treasurer, yes, Director Keith Stable is coming over to answer that question.
Okay, thanks.
Madam Treasurer, you're correct. This is $125 million to the Climate Infrastructure Fund 2, and then a co-investment vehicle of $125 million to be a companion for that. We started out initially with them with $100 million investment in a co-invest vehicle, and in the main fund vehicle, they've drawn or committed about $80 million of that 100 in the co-invest. So they've been extremely good partners. And then you may recall that they management team made a trip back to Santa Fe to do an infrastructure investment seminar for certain committee members. And so they've been helpful to us both in terms of managing the portfolio and providing support to the team here.
Okay, thank you for that reminder. So Chairman, the only thing I would ask, and I know I probably sound like a broken record, John and I have talked about it a little bit, but having a sheet of paper that tells us what we're already committed, what percentage of that asset allocation is part of that deal, and then what we're planning on doing in the future. I think that's a good trick for us to get through fast. And then also on these deals, separating what the dollar amount is from the co-investment, because it is very different to do 125 and 125. I think that's a way better deal because of the fees and the cost. So if we get a lot more of these re-ups and top-ups to be able to have the breakdown of those, I think would be helpful, and to know what we've already invested with them would be a quicker way to get through without having to ask you all. And I know on that cheat sheet, you're still trying to develop like what we should put on it, but I think something that gives us a snapshot of what's been done along with the paper that they write is really going to be a helpful cheat sheet.
Thank you, Mr. Chair, Madam Treasurer. We're going to try to have those cheat sheets following each of the director's memos, starting with the August meeting.
Awesome. And if you need any type of insight from any of us of some stuff, by all means, we're here to help too.
Thank you, Madam Treasurer. I think all of those are really helpful suggestions, and it'll really be helpful for members of the council to have that information just right in front of us. So thank you. We look forward to that in August. Okay, moving on to the CFO report. Mr. Shipp.
Mr. Chairman, I don't have any comments other than to say we're quickly getting to the end of fiscal year 25 and the beginning of fiscal year 26. And then shortly after the beginning of fiscal year 26, we started working on an appropriation request for fiscal year 27. So the August meeting will have a little bit of feel for all of those. So just be aware of that. And that's all I have. Unless there's questions.
Do we have any questions from council members online? I don't think we have any questions. Any questions here? So thank you for that. I know you're in 3 fiscal years now, probably,
yes,
or getting close to it. So yes. With that, and then the audit, has that started up yet?
It has not, but it is in process of starting.
Okay, great. Well, thank you for that, and thank you for all your work on the agreed upon procedures. Those are, always coming in with the highest level of review from our auditors. So thank you so much. With that, closing matters, number 5, closing matters. Do we have any old or new business? Okay. We don't have any old or new business, so with that, our next SIC meeting is scheduled from Thursday to Friday, July 17th to 18th, 2025, 9 a.m. at the Los Poblanos Historic Inn and Organic Farm. And again, that's going to be a retreat.
Yes, so Mr. Chair, it's going to be a retreat led by Ascension. Coming out of the December retreat, there was interest from the council in having Ascension come back out and help develop an investor identity and model for Ascension. So it's going to be a 1.5-day retreat based on that. It is going to be a 9 a.m. start time, but there's going to be an optional 8:30 a.m. breakfast for anyone who's able to join us for breakfast. And again, we would appreciate it if you could all RSVP to Francesca for whether you can attend the event, whether you can attend the optional dinner the first evening, and then whether you can attend the lunch the second day. So thank you.
And John, there won't be any voting items at that meeting?
Correct. There won't be any voting items.
No voting items, and And so we really will have that meeting in replacement of any July meeting. Any questions on that, council members online? With that, I believe we can adjourn. Oh, no, public comment. Oh, public comment, sorry. Do we have any public comment?
Mr. Chairman, we do have a couple of public comments submitted today, by Local 150. That is an organization, that has, I guess they are on strike and are in a labor dispute with a portfolio company, related to Icon Infrastructure, which was pulled from today's agenda. They have sent a couple of different concerns. My suggestion would be to share those with the council rather than having me read them, because it'll take about 10 minutes of just cold reading. I think we can give them to the council members directly and put them into the record that way. That would be my recommendation.
Any questions?
I did receive a letter from them. I sent it to John Clark as well. And I'm grateful that we did pull it off of the agenda, because I think I need to have a conversation and see what's really going on and get some more perspective. But the letter will be shared with all of the members, but I think it is something that is concerning, in particular. Their sister company in Quebec, Canada, has the safety standards that they're just requesting to have in Chicago in the United States. And so I think they're pretty simple requests. There's only 25 employees that are on strike. And so I think it's something that can be resolved pretty easily if they can all just meet. But I'm glad we didn't have it on the agenda for today. And then there's one other thing I just wanted to make sure, since we're not going to have another meeting and I don't know what staff will be there. I had spoken to Mr. Clark recently, and I wanted to make sure all of the board council members are aware, and I know I've mentioned this a million times, but I just want to make sure I'm clear. So when I attend different meetings or conferences, or I'm on a panel, or I'm a keynote speaker, I always am proud to mention PARA, ERB, and SIC and the work that you all are doing. And that we're the second largest sovereign wealth fund in the country. And then I do also mention that if they ever want to come to speak to us, they're welcome to do so, and they can get on public comment. Mr. Woolman takes care of all of that, and he keeps me apprised of whatever conversations they're having. But I do want to be clear with staff, when I send items to John, which now I'm only going to be sending them to John, I have no fight or dog in the fight. I don't know who these fund managers are most of the time. I just met them for a quick 5 minutes at a conference, and I tell them to send me stuff to send to PARA, ERB, or SIC, whichever one is relevant. That's for staff to decide. It's your expertise. You're the one that's dealing with the pools. So I just want to make sure that I'm clear that when I'm sending these to you, it's not because I'm encouraging or pushing, because I have no concept of what they have or have not done. I have no idea what they, how they would tie into our portfolio. But I wanted to be a good team member and being able to give you guys these items. And so moving forward, and this is, I was sending them to Vince and to John, but moving forward, I'll send them to John so I don't make Vince's inbox full. But they should go through the same due diligence process as anybody else. And I also want to be clear that if anyone is using my name in any kind of way with any one of you, you are welcome to call me on the spot. And I will make it clear that we follow the rules of our due diligence process, because that's what makes us successful as SIC. And so I just wanted to make sure that that was clear on the record, and that staff is aware, since staff is in the room. And I apologize, I can't be there in person, but I had to let John know I had a family appointment for one of the babies. So that's all I have on my end.
Thank you, Madam Treasurer. I appreciate your comments.
Yes, Madam Treasurer, I too appreciate your comments on that. I think that with the more visibility that our funds are generating, more and more of that's going to happen to council members. And so I think it's important that we have those protocols in place to make sure that things are clear. And that's probably going to be a work in progress, because, I mean, over a very short period of time, we're up to 60 billion. We're expecting to get to 100 billion. More and more folks just know about what's going on in New Mexico. So, thank you for that.
Yeah, I definitely want to keep promoting SIC. And I think because we are still short-staffed and we have a lot of deals and they've been putting in a lot of work, it's only right for me to tell people to send stuff in, and then you get more options, whatever those options might be. Some might be good, some might be bad. But what I don't want to happen is for people to try to manipulate a meeting or a situation with SIC staff and say, oh, well, the treasurer called us and no, I don't care about any one individual aspect did fund. I don't know any of them except what really has been presented to us. And I can't determine anything off of a 5-minute conversation with someone as they're thanking me for presenting or being on a panel. So I just want to make sure that the team knows I have their back. I'm here to support you guys in that process. But what I did also tell Mr. Clark is that it still needs to be fair across the board in all due diligence and whatever you guys' process is, that process is aligned so that everyone has the fair and equal opportunity to at least be presented, show the presentation of it to you and see if it works or if it doesn't work. I mean, you guys see these a lot, so you guys know better than I would. So I just wanted to make sure that was very clear. I think Catherine Allen has a comment.
I was just gonna say, and thank you for that. And I've had the same issue where I had someone that approached me that wanted to talk to or wanted to do a presentation, and I called John, and John said he was the right, it starts with him. But what I'm asking is, John, I don't know if we have that written anywhere, and maybe we ought to write down the process for when any council member, whether a public member or a private member, is asked to present in some way to the council what's the appropriate procedure. And if we have that written, we can also give that to that person. So I think that might be helpful to make sure we codify basically the process.
So, Chairman, on that point, I would say that everyone has the right to come before the council for public comment and talk for 5 minutes of whatever they want to talk about. And I think that's a critical aspect for us as council to be able to see, because unlike a lot of you on the council, I go to these different presentations and groups and meetings, and I see the diversity of fund management in the country that I was not seeing necessarily be presented to us before. And I put that in past tense because I think in the last year, there has been so much more progress in the diversity of what our asset allocation looks like internally. I see it. And today was a very exciting day to see a lot of that. But I don't want to inhibit people from having that opportunity for us, as all of us being public servants, to be able to have that process. But when it comes to like their decks, I'm just sending them to John directly, and then I send an email to him and them, and then say, hey, here's another one, and then connect them, because I told John, some of them say, hi, Laura, and it's so disrespectful. So I told him, if they're calling me hi, Laura, they have no idea who I am. So I'm just forwarding them to you. And if they work, you can send them to Keith if they're on his side, or Mr. Cassidy on his side, or Tom on his side. You do what you need to do with them. But I just want to make sure people aren't being inhibited because they're going through one of us, but that it's going to John, because then staff doesn't know who it came from. They just know it's somebody else to look at. And so I just want to make sure that whatever this process looks like as an elected official and public servant for New Mexicans, I have to be able to have access for people to talk to me, but I want to be respectful of my team at SIC and know that it's their process that needs to be respected and followed, and that I respect that process.
Thank you all for those comments. Any other comments?
Just a question from John. Do we have it codified somewhere? Is it written somewhere, the process for other funds or other entities to approach us with presentations? Is there a process for a written process for the council members?
Mr. Chair, Member Allen, there's no written process, but I think I have formulated in my mind what the process could look like that wouldn't in any way inhibit the access that the treasurer was talking about, but would perhaps, provide clarification on how it could work and maybe provide, further separation so that, there couldn't be any, outside, complaints that there is even an appearance of anything inappropriate. So I think this is something that I would bring to the governance committee to take a look at, and we could take a look at that wording.
I think that's great. Thank you.
And I just wanted to share my thoughts, in the investment policy, I thought we had something that said that council members shouldn't be involved in those, if I remember correctly. But I think that there's a difference between, actively doing so and talking to a person in public and saying, these are the people that you need to talk to.
Mr. Chair, we had worked on some language for a revised investment policy statement last year that did contain some of that. I think it was imperfect, and then also that revised investment policy statement did not end up getting adopted. So I think it's worth revisiting the language, but also I'd like to go in and revise it to provide further clarification.
Okay, great. All right, thank you very much. Is that all? Yeah. Okay. Do we have a motion to adjourn? I don't know if we need that. We don't need that, but if you all are okay with it, we can adjourn. Thank you.
Thanks, everybody.
Thank you, everyone.
See you in July.
Thank you. Bye-bye.